Resurgent India Limited is a SEBI-registered Category 1 merchant bank established in 2005. We help financial institutions identify the right business entities and work with businesses to secure the right amount of capital at the right time, fostering stronger enterprises and a more resilient economy and society. With over 300 professionals and a nationwide presence, we are market leaders in debt syndication and stressed asset advisory.
Named in homage to Sri Aurobindo and the Mother, Resurgent India Limited draws its inspiration from their principles. Their teachings form the bedrock of our organizational culture and guide us in conducting our business with integrity and purpose. Resurgent stands firm on four pillars: trust, capability, hard work, and relationships.
Resurgent offers a 360-degree service model, supporting businesses across their entire financial life cycle, from project appraisal, valuations, and regulatory compliance to capital raising for early and growth stage companies, and further, to stress resolution and insolvency advisory. We are with you at every critical stage. Tailored solutions to meet your needs.
At Resurgent India, we have cultivated an open and inclusive environment that cherishes every individual voice. We have nurtured a culture of entrepreneurship, motivating individuals to fearlessly explore innovative ideas.
Our mission at Resurgent is closely aligned with the three C's lender evaluates: capital, capacity, and character to make lending decisions.
Please let us know how we can help. Get in touch with us today. Resurgent India Limited is a SEBI-registered Category 1 merchant bank established in 2005. We help financial institutions identify the right business entities and work with businesses to secure the right amount of capital at the right time, fostering stronger enterprises.
Ladies and gentlemen, a very good afternoon. My name is Aditya Malik. It's my pleasure to welcome all of you to the fourth edition of BW Future of Finance Summit and Awards as well. The summit serves as a platform to discuss, to celebrate, and also illuminate the remarkable journeys of organizations and pioneers like yourselves who have been championing financial strategies. The theme for this year, it's BW Future Finance Summit, which is empowering the future business powerhouse. The panelists will discuss on diverse themes like AI and finance, careers beyond balance sheets, new capital agenda, crisis leadership, and also CFOs as guardians of trust. Following the discussions, we will also have the BW Finance 40 Under 40 Awards ceremony as well. BW Business World, led by Dr. Anurag Batra, Chairman and Editor-in-Chief of BW Business and the founder of the Exchange for Media Group, is the fastest growing business media house in the country. With a network spanning across 25 niche business communities and 8 magazines, BW Business World is proud to be entrenched in various verticals in the domestic as well as global business ecosystems. And with changing times, we now have a massive readership in the digital space as well. We in our portfolio have 25 niche B2B communities that organize conferences and also forums to facilitate interactions between sectoral business leaders and also create a conducive environment for collaboration. To keep yourself updated about the developments, please subscribe to the BW Business World Group magazines, and I promise you, it will add to your quest for knowledge and also insights. The latest issue of the magazine, it features India's fittest leaders above the age of 40 and also on how personal resilience and disciplined living are shaping India's new leadership mindset, along with the BW Top 100 Marketeers who are redefining business influence in 2025. Do also look out for the issue which is upcoming on B School Specials, featuring India's top management institutions that are shaping future of business leadership. Any view, any opinion, any picture that you take in the event today during the award ceremony, आप उसको upload करते हैं किसी भी social media platform पे. Please also use the hashtag BW Future of Finance. This event is also being streamed live across all BW Business World platforms, including the social media channels and also on www.bwcfoworld.com. A big thank you to our partners for today. Our fundraising partner, Resurgent India. Our event partners, the Thick Shake Factory, Joy Travels Private Limited, Opal Events, Reality Plus, Exchange for Media, IWM, Buzz, and Beanley. With that, to formally open this event and to welcome all of you, please join me in welcoming to the stage Dr. Anurag Batra, Chairman and Editor-in-Chief of BW Business and founder of the Exchange for Media Group. Please.
Good afternoon. Let me say what Elizabeth Taylor said to many of our suitors. I won't keep you long. Time is of, immense significance. We were running late in the day, so my apologies. I didn't make the award speech because I were running late. Welcome to Mr. Fukan from the Ministry of Finance. Welcome to all the leaders from the financial and business world. This is the 4th edition of the BW CFO World Conference and Awards. I just want to say that I don't know about finance like you do. I'm an entrepreneur, so of course I know a little bit. I went to a business school, so I know a little bit. And I meet bright people like you, so I know a little bit. The more you know, the less you know. And I only want to say that the CFO community is a very important community. We are in early days. We started the community 5-6 years back, but we have a long way to go. My senior colleague, Mr. Harbinder Narula, who's the CEO of our healthcare community, our well-being community, and our pharma community is also here. In fact, I was not going to be here now, but my flight is delayed. So I'm here. I'm having to go for something to Bombay. I just want to say that we just did on 15th November and 16th and 17th November, we took almost 100 CFOs of very large companies to Amritsar for an offsite. And, I don't want to talk about how good it was, but I can only say that we got a very, very, very good feedback, both on the content and the format and logistics, because, small things like logistics is also very important. If it goes wrong, then everything else doesn't matter. We had Mr. Partha Sarthi there. We had Mr. Charanjot Singh Nanda there. We had a member of the Economic Advisory Council from the PM, Mr. Gaurav Ballabh there. He's an IMA grad. He's also a spokesperson of the BJP. And he was earlier spokesperson of the Congress. So the CFO community is very important. We have BW CFO World, and we know how to build communities. We're in the business of building communities. We're not in the business of magazines, events, websites. We do all that. But we're content or form neutral. Whether the content is in digital format, text. And I don't know how many of you follow the Business World handle on social media. How many of you? 2, 3, 4. We should get all of you to follow. I promise you there is a managing editor of ours called Mr. Palak Shah. How many of you follow Palak on Instant? He's a gentleman. I promise you, and I'm the founder of Exchange for Media, those who are from media, I know a bit about media companies. Last 25 years, we are reporting on that. And I can tell you that other media publications do a great job. Life is abundant. But I can tell you, Palak stories are the best. In finance, especially in white-collar crime, investigative journalism. For example, look at his coverage of Jane Street. His coverage was such that he got a call from the SEBI chairman and he gave us an interview. It was a polite way of saying, Ammat or Mitliko. But that doesn't stop Palak. Just read his stories. Don't believe me. Read his last 20 stories, including his story on Durandar. including, so, we are as good as the people that work with us. We're in the content business, the people who do content. So follow Business World on Twitter, LinkedIn, Facebook, whatever medium you frequent more is more convenient or more familiar with. He's done stories like, I don't want to, he's done a story on ethanol, just say ethanol and Business World. I mean, I don't want to give you the headline of the story. It's a very provocative headline saying one minister's family made a policy into profit. I don't want to say which minister, whatever, right? He's done a story on, let's read his stories. And I can give you 5, 6 colleagues of mine who write stories like that. Because in a world where sometimes I feel I'm in the wrong profession, because you have to balance being an activist and honest. I also run a business, though they shouldn't be idly in 2 different directions, but one has to be very sensitive, careful. Mr. Fukan, you're here. 3 months back, my CFO came running to me, sitting in my cabin, and he said he's got a call from the Ministry of Finance. The PS2, the most important person in your ministry, called on a story that he wrote. And he was talking to Mr. Palak Shah, and Palak was refusing to change anything in the story. And Ankit said, I've given him your number, he'll call you. So I said, give me his number. I'm an entrepreneur, I'll call him. The secretary, joint secretary in the Ministry of Finance, the least I can do is to be courteous and call him. And I called him and I understood what the point was. And I said, I'll speak to Palak. You can call him after that. I spoke and Palak was arguing with me, which is okay. I'm used to it and I respect him for that. So why should, but this is right. He said, this is Ministry of Finance. Okay. So, and what he's asking for is not, because he's not even asking you to remove the story. He's being okay. He's just saying that this point is technically not right. He said, okay, I'll think about it. And you have to give respect. Otherwise, the people just don't work for money. 10 minutes, your colleague, you can find out from him, called him, and again, he refused. Finally, I had to call him, and sometimes I can be a boss. I told him, I'm telling you, okay, make this change. He made the change. So that's the kind of stories he does. So do follow Business World handle. I can show you many stories. In fact, if Tanvi, you are here, Tanvi is not here, Tanvi's team, we should show Palak Shah's stories. Last 20 stories, done a story in Durandar. We're an editorial product. It's like, if you're an airline, it needs to be on time. If you're on Spotify, the user experience matters, the quality of content matters. So I don't want to say much, but I also read Business World for many years before I acquired it 12 years back. So I'm first generation. I studied at MDI from the first batch. And sir, I was, childhood dreams come true. The first alumnus of MDI to be on the board of MDI from 12th Jan 2020 to 7th June 2023, I was on the board of MDI. First PGPM alumnus, Tripurari Sharanji was on the board. He's an NMP alumnus, which is an executive MBA. So dreams do come true. Do dream for your companies, for yourself. I want to say 2 things. We do awards, and we live in a world where we like recognition, we compare, and it's okay. It's the real world, I can't say, as entrepreneurs, we look at a market cap, we look at valuation, we look at, how much profit, top line. We even look at the impact of a story. So there's nothing wrong. Doing the right thing in the right manner for the right reason, it's okay. We all want impact. If you're an actor, you want more audience to watch it. So whatever business you're in, if you're doing the right thing for the right impact, it's okay. But I do want to say that I read this book 7 months, maybe now 8 months back, called Fluke. F-L-U-K-E. Fluke. I'm sure you know what fluke means, right? Urdu mein it means tukka. Hindi mein it means kismat. Or, prarabdh, you can say, preordained, luck, chance, serendipity. We give ourselves too much credit for our success. We'll have the CFO 40 under 40 awards. Ravi sir has chaired the jury in the past. He was very happy with the Tex Leaders Awards and the quality of winners. And it's the first year. Initiatives are like children, they grow. I only want to say that all of you must be mighty proud of where you come. You're large company CFOs. Some are CFO -1s. You're growing, and luckily we're in a country that is growing, economy is growing, so you'll do even better. But the only thing I want to say is that wear your luck lightly. I'm sure you do. I'm talking to myself, not to you. Because our success is a lot about what our parents did, our grandparents did. उनके सुकर्मों का फल मिलता है. That's what I feel. I have two grown-up children. These days, I think a lot more about them than I used to. My prayer in the morning is a lot about my children. Mostly it's about me and my wife and my parents. I lost my mother last year. But these days it's about my son, who's the younger one. My daughter is the older one. So I feel whatever I do will impact them. Because whatever I've got is because of my parents' good karma. That's what I genuinely believe. I may work hard, all that. That is a given. You got to work hard. You don't know what's your luck. Though I know 30, 40 good astrologers. If you need any recommendation on astrology, you can mail me or call me. And that's not a joke, right? So I just want to say that wear your success lightly. Contribute. I'm sure all of you are contributing to the economy, to social causes. I do think about those more because you're all very senior people, like the quality of air in Delhi, those of you live in Delhi, or the urban mess. You have to budget more time if you're traveling in any city. These days, whatever predictability you had in the past, someday it may happen, may not happen. And I want to end by saying that I read this book 23, 24 years back. And it's the first book that I mass gifted. It's a book called Tuesdays with Maury. Have you read it? Has anybody read that book? By Mitch Albom. You read it. What did come out in the book? What is the central message you took away in the book? Okay, of course, looking back, reflecting on your life, because Maury was in the hospital and Mitch was visiting him. But the gist, which is, I think is the intended message, like a painting, you can take various dimensions of the painting. In a book also, there are multiple messages. But the central message is spend time with your loved ones. Because मैं बहुत सारी और conferences हम करते रहेंगे और भी media company करेंगी. And it's important to participate in that, or whatever passion, work you have, but spend time with your wife, husband, parents, sister, brother. We get too busy in personal accomplishment. Again, I'm talking about myself. I'm not talking about you. We get too busy. I read this article, my MDI junior, Ritesh Vora, he's among my closest friends, 2 batches junior, sent me an article about the friendship epidemic, lack of friendship. That we are not going to our real friends enough. We're not spending, we're all working, chasing our dream, which is okay. There's nothing wrong with it. So I want to end by saying that congratulations to all the winners. It's through a jury process. We take our jury process very seriously. I don't know the list till the end. I got it in the afternoon because Ravi sir asked for it at 12 o'clock. So I also ended up eyeballing it. My team has no brief on who should win, who should not. Also, in the early days of the awards, the entries are certain, they grow. So congratulations. The most important thing is sleep. How many of you sleep more than 6 hours? How many sleep more than 7 hours? How many of you sleep more than 8? Anybody who sleeps more than 8? Aditya, no wonder sometimes you are, you know what I'm saying. Once in a while, but it's okay. Also, I also struggle when you're very early. I sleep 8+ hours every night, except last night when my daughter came from the US. So I was up till very, very late. And that's why I didn't come in the morning, though I live across the road. So I just want to say another thing is we compromise on our sleep. Sleep is the single most important thing for quality of life. We all know that, but we compromise on sleep. So don't, all the things I'm telling you know is nothing new. But I do want to bring it top of mind. If one of you sleeps more than 8 hours, because I brought it up today, I feel it's worthwhile. There's this book I read 12 odd years back. Then I read it 2.5 years back when I came to the healthcare conference in Bangalore. It's a Matthew Walker book called Why We Sleep. I'm carrying 2 books to read on this flight now. I'll read them because that's the only time I get to read. Sleep can help in every way. Long-term dementia risk can be brought down. Cancer risk can be brought down. You can be mindful. You'll eat less when you slept well. I mean, it's just a science. And sleep is 70, 80%. then is 25% nutrition, and then is movement. Of course, if you move, as they say, sitting is the new smoking. You should get up every day. Not that you need to smoke in Delhi. Saving ITC must be losing a lot of revenue. But on a serious note, all the best. Do follow us. How many of you started following Business World on Twitter or X after I requested you? Hey, you follow Palak. Yeah, Palak is a gentleman. His name is Mr. Palak Shah, because normally Palak is a girl's name, mostly. You can subscribe to the magazine also. I have my colleagues there. As I said, I'm not an expert on finance, but compliance has become very important. The use of AI I'm at a startup and they wanted investment. They're helping large finance organization, as in if you're a 20,000 people organization and you have 200 people in finance, through use of AI, they can bring it to 20, 30 people. You don't need that many people in finance. I don't know it's good or bad, but I'm sure the people will be absorbed in jobs that are more value added. So, it's a fascinating domain. I'm sure you are using AI to be able to build more efficient organization, use the tool. I want to end by recommending a book that I read on my last flight. It's a book called Empire of AI by Karen Ho. She used to work with Sam Altman, and it's a very interesting book. I'll leave it at that. Interesting means it is also a very worrying book. It talks about the motivations of people who are building AI and their methods and so on and so forth. So I wish you luck, all the best. Oh, yeah, these are some of the articles. This is the Durandar article. Chidambaram Mairam, the villains, the movie missed. He's a very brave person. Whenever he does a story, I am like, who will call me today? I'm always looking at that, sir. Right? And then he keeps telling me that, you shouldn't worry. Again, and for example, his Jane Street story, look at all his Jane Street stories. I think he broke every story on Jane Street. And we got credit in every other, whether it was an ET, BS, FE, Mint, to Business World, a lot of stories broken. And there are many colleagues like that I could go. Anyway, these are Palak Shah stories. For example, he did a story just one day before Putin's visit, or around that time, inside why India-US trade deal has been pushed to the back burner. Then he did this story in last week of November. Behind the collapse of Builder.ai, was there a shadow? I mean, his stories are outstanding. Long form journalism, very detailed, very well researched. So do subscribe to Business World magazine or follow us on Twitter, LinkedIn. All the best. I'm sure the purpose of conference is also for you to meet each other, collaborate, make new deep connections, and hopefully it'll be professionally valuable to each other. Thank you for being part of the BW Business World Forum. These are early days for the CFO community, but we are very determined to grow it, put more resources, people. My editorial colleagues, Savi Khanna, Urvi Srivastav, and some young colleagues whose name I still don't know are here. So I'm sure they'll engage with you and be able to take the deliberations to people beyond the room through our audiences. And if there's any feedback to us, those of you who want to write for BW CFO World, or any other suggestions, they are welcome. Thank you. God bless you.
Thank you. Thank you so much, Dr. Batra, for the opening address. Before we begin, my only request to all the speakers and panelists, because हम late हैं, वैसे काफी लेट कहना भी सही होगा, बहुत ज़्यादा भी कह सकते हैं. But we'll try and make it. We start the awards ceremony on time. That is my personal goal for today. I'll only focus on that. We've got a timer here for you. And when it says time up, they will play a buzzer and they'll ask me to just stand and stare at you. जो हम दोनों के लिए बहुत embarrassing होगा. We'll try and not reach that situation. Only request to you, because you also senior members from the fraternity. You have so much of knowledge to impart and share with all of us. And we want that. That's why we're all here. But just a humble request. With that, let's start with the first keynote address for today, which is on finance architects, shaping the future factory of business. And to talk about that, please join me in welcoming to the stage Dr. Abhijit Fukon, Economic Advisor, Department of Financial Services, Ministry of Service, Government of India. Please. No, I did, sir. Ministry of Finance. Ministry of Finance, Government of India. Now let's welcome, sir. Sir, please. Ji.
Very good afternoon to all. I know it's quite difficult to keep ourselves awake, especially post lunch, unless Tom Cruise with a daredevil action scene or Shah Rukh Khan with a romantic song actually enters. But I'll try my best to keep you awake. First of all, let me thank Business Wall for inviting me to speak. It's always been pleasure to interact with the industry leaders. There are so much to actually, gain from their practical insights, which are really useful for policy making. I think the CFOs, the CBOs, the CTO, and the CRO, they are the four foundation pillars of the corporate governance architecture of a company. All these forces have been playing, a very, very critical role in ensuring the high standards of corporate governance and, act as a check post for any spillovers. Having said that, I thank, Business Wall for organizing and taking lead for recognizing those leaders, especially the CFOs, for their great contributions in their respective field. I extend my, congratulations and sincere thanks to the winners who have lifted the award and probably those who are, waiting to lift the award in the evening. The event actually being organized at a time, especially when the financial sector, evolving in the recent past, driven by emerging technology. The last decade, what I feel is that, was driven purely through digitization and digital transformations. The present decade, we are talking about emerging tech like AI, ML. And the next decade probably will take us, through beyond our imaginations by emerging techs like cloud computing, quantum computing. So from mere, digital transformations to AI, ML driven technology to actually, making ourselves ready for quantum computing. So those are the kind of, the evolutions that have been taking place in the financial sector. And the financial sector, of course, in terms of, deployment of technology is quite mature as compared to the rest of the sectors. Before speaking to the area, let me take you, for a while, we as a country, where do we stand today, and what are we aspire to actually, go probably a decade or, 2 decades later. So with that, let me put certain macroeconomic, indicators. We all know that despite many, odds, geopolitical hostilities, trade wars, going around the world. We have the supply side, disruptions. A lot of difficulties are being actually, facing by the countries all around the world. And beyond that, there are certain, inherent institutional issues, domestic issues. But even then, India has been actually able to maintain a quite high and sustained, economic growth rate. Today, what we saw is that the Q2, GDP growth stands at around 8.2%. We are the, fourth largest economy with close to $4 trillion economy. And probably we are aspiring to actually reach to $30 trillion economy by 2047. There is a huge buoyancy in the overall, tax collections, especially the increase in the GST collection, which indicates a healthy business growth. We have a historic high foreign exchange reserve, roughly around 700 billion US dollar, probably highest in the world. So is the case with the BFSI sector. The BFSI indicators, looks very sound, stable. We have a, very a healthy, banking sector. The overall gross NPA and net NPA of the banking sector have been going down. We have witnessed for the first time this month that credit surpass the deposit, which itself is actually a very, very positive indicators that signals that actually there is no dearth of money. Money is available in the market. Probably what we require sound and sustainable business models. One of the very, very important factor behind the sustainable and high economic growth rate is a robust and resilient financial sector. So this resiliency actually shows a healthy balance sheets in the banking sector. There are, positive sentiments all across the investors, domestic institutional investors, foreign institutional investors. The overall policy and regulatory, environment are quite friendly and supportive to the businesses. The consumptions are actually, derived through increase in the income level and through fiscal supports. For instance, 2-3 months back, there was reduction in GST and the drive actually, consumptions beyond what the industry expected. Regulatory easing to ensure that there is a sufficient liquidity in the market. We have seen some of the very, very, supportive interventions by the regulator. RBI in last 2-3 months, they have also allowed, the bankings to finance the merger and acquisitions, buying stocks, equity from the market. Those are the different, interventions from the government, from the regulator, and also, supported by increased consumption level by the, public. So some of the key actually drivers behind these robust and resilient financial systems are the first, what I feel is that, digitizations and digital transformations. We have seen that there are a lot of, digitizations all across the government and private sector. Today, India stands the third largest digitized, country in the world. We are slightly behind China and US. We are the highest recipient of, inward remittances. In the year 2024-25, roughly around 130 billion US dollar, remittances were flown into the Indian economy. And in terms of readiness of our AI, deployment, so we are the fourth, globally recognized, AI standards. So if I talk about the digitizations and digital transformations, it will not be completed if I won't speak about the DPIs, digital public infrastructures. As we all know, DPIs are the foundations of, entire digitization approach of the government. These DPIs are multi-layered, architectures. We have the layer 1 Aadhaar, which is the identity layer, the layer 2 payment layer, which is the UPI, lending layer, the unified lending interface, data layering, we have the account aggregator, data storage, DigiLocker. So these actually DPIs have been, facilitating the business entities, especially the fintechs, to come out with different, innovative solutions to, provide the banking services to those who are unbanked or maybe, located in interior areas. So these DPIs have their own, inherent strengths. They are much faster, much, scalable, transparent. So because of these, I think there are a lot of developments happen with regard to the financial inclusions to the length and breadth of the country. So the last phase was driven by digitization and digital transformations. The present decade, I feel it will going to be driven by the AI. So in terms of readiness for AI, I feel there are three, again, critical layers of AI. The first layer is compute. So in terms of ensuring that are sufficient, computing facilities, the government have been, taking various initiatives. The existing GPU, which is roughly around 18,000, are expected to reach 38,000 by 2030. The government of India already set up a India AI mission. These compute facilities are being provided, as a public good through the facilitation of cloud services, and this has resulted, the cost of using these facilities roughly around by 40%. The layer two is again the data layer, to ensure that there is a seamless, data transfer, connectivity, and discoverability. The government of India, set up a AI coach. The AI coach actually support various institutions to create and deploy innovative AI solutions. The course is presently house 3,800 data sets uploaded by 53 organizations. It already built 251 AI models, 30 use cases, and these are being widely used, by entities across businesses. Layer 3 is the connectivity. Under the BharatNet, 2.8 lakh gram panchayats are being connected with high-speed fiber net. 6G, rollout plan is at a very advanced stage, and we are hopeful that by 2030, the 6G plan will be rolled out. Energy storage, which actually plays a very, very critical role to ensure that the data centers or the global capability centers are running smoothly without any interruptions. These energy shortages have been reduced from 4.1% to below 1% presently. As I'm speaking, that there are a lot of initiatives at the government of India level, regulators across different sectors. There have been, various initiatives taken to establish center of excellence sector-wise. There are already 58 center of excellence which have been approved to be, set up across different states. The government of India has also, launched a scheme, research, development, and innovation schemes, with a, funding provision of 1 lakh crore to strengthen the R&D initiatives led by the private sector. There is also an interministerial committee which has been constituted to ensure that the AI deployment by the business enterprises are based on certain ethics, certain principles. That committee has been reviewing and issuing various guidelines from time to time. The second broader aspects with regard to financial architecture is the fintech and the financial inclusion. Fintech has been playing a very, very critical role in ensuring that financial services are, made available to those who have not yet been actually, brought in the financial net, either by ensuring, digital services or ensuring the last mile connections. Currently, there are more than 11,000 fintechs who have been working, across different segments with a cumulative investment of $34 billion US. And the market size of fintech is expected to reach $420 billion US by 2030. Financial inclusions, when we speak financial inclusions, the GEM Trinity, which is very unique. It's a fusion of, deployment of technology, delivery, and the inclusions. So we have witnessed the kind of, the interventions that the platform has delivered in the past. Through the platform, roughly around 47,000, crore rupees have been transferred to the sections of the people which are being covered under different flagship schemes of the government of India. Social sector schemes like Atal Pension Yojana, Prime Minister Jeevan Jyoti Bima Yojana have expanded the social safety net to millions of Indians. Credit guarantee schemes like CGT, MSE, NCGTC, or credit, enhancement schemes like PM Swanidhi or PM Vishwakarma. They have enhanced the, credit to the street vendors, MSME, women, marginalized sections. The third important aspects of financial architectures, which have actually, enable the businesses to flourish, is the regulatory and policy overhauling. In the last few years, we have seen a lot of, regulatory overhauling. The Reserve Bank of India have been issuing a lot of, guidelines, master directions based on the technology that have been keeping place from time to time. Recently, they have reduced the number of guidelines, circulars issued from roughly around 10,000 to 250 to ensure that there is a easy, understanding of those guidelines. The Ministry of Finance is also working on a FinTech Vision Strategy 2047, looking at, India to establish the FinTech capital of the world. There are similar, other initiatives taken by the regulator, which are typically, looking at more and more innovation enabling. For instance, the regulatory framework recognizing the self-regulatory organization, SRO, is one example where the regulators is looking at to actually keep a balance between the regulatory compliance and the innovations. Sandbox is again, another area where the regulator has been enabling the tech-driven companies to experiment their innovations under control environment and to actually make them ready to go to the market kind of a scenario. The fourth most important pillars of this entire financial architecture is consumer protections and grievance redressal framework. The entire journey was actually begun with looking at, hearing at the customers in terms of the service delivery, their satisfactions level. Now we move from the quantity of grievance redressal to quality, how those grievances are actually getting redressed. There are a couple of regulatory interventions. The Reserve Bank of India, they have One Nation, One Ombudsman schemes. They have also ensured that the banks should have an internal ombudsman, and especially to look at those grievances or concerns of the customers where the banks are straightforwardly saying that there is no solution. So there is a separate kind of interventions to look at those customer-centric approach, or ensuring that there is a solutions to address the customers problems. Going forward, there will be a lot of new elements. The Ministry of Finance have already started giving ranking to the financial institutions based on their customer-centric approach, the innovative tools. They have deployed a lot of banks. They have deployed AI-based chatbot to assess the customers' feedbacks. So we have started ranking the public financial institutions, and going forward, we have already started discussions to also engaging the private sectors and bring the entire BFSI fraternity into one common platform to ensure that there is a digital trust built up in the entire ecosystem, and through the interventions of technology. So these are the four broad buckets which actually have played a critical role to ensure a robust and resilient financial sector. And going forward, there are certain areas probably, where we need to look at or discuss, deliberate more and more. Some of those areas, I wanted to just, flag. Of course, from the government of India, we have been looking at to take the sound, fintech solutions, especially, fintech solutions are far-reaching and very mature in the payment segment. UPI, RuPay, these are the solutions which have been actually, global standards. So we have been taking up a lot of initiatives on a country-to-country, regulator-to-regulator. Going forward, there will be more, initiatives, perhaps, ensuring cross-border, payments and trade settlements, and especially, given the kind of, situations that countries like India have been facing today, especially where there are sanctions from different, parts of the world. We need certain alternate payment systems so that, those sanctions could be taken care of, and the settlements could also parallelly take place. These alternative payment systems may be similar kind to the kind of the Euro zone. They started with a Euro zone, then they actually came out with a Euro as a currency. So probably we need to actually look at whether we require, the alternate, region-wise payment, and settlement systems like SWIFT, or probably a substitute of some of the, global currencies. It's maybe Europe, countries or blocks like BRICS, which consists of roughly around 40% of global trade. So having a kind of, a payment system among the BRICS country actually would enable, settling the cross-border payments among the nations. Another area could be integration of fast payment system, integration of UPI with similar payment system across the world. There are a couple of such, integrations already happen with some of the countries. Presently, it is available with Singapore, UAE, France. Some of these countries are interoperable, both P2P and P2M. Going forward, we'll be having more and more such, cross-border integrations. The another use case is cross-border CBDC. So cross-border CBDC will actually, ensure that this kind of a, scenario, trade disruptions will be taken care of, and there will be a bilateral settlement of your trades and other issues. We have another challenge, more and more we expose to emerging techs like AI. We have the other sides of these technologies. Cyber security is, these sides. So going forward, the quantum computing will be having a lot of challenges actually to decrypt the, the present encryption process. So going forward, we need to have more and more international collaborations like, International Cyber Alliance. To actually take these cyber security issues, we need some kind of a alliance with like-minded countries, because these issues requires a cross-geographical collaboration with law enforcement agency, with the regulators across different segments. We also need to actually, move from mere inclusion to well-being actually. So far, we have been talking about inclusion, and we have done enough. We already actually reached to the saturation level. From the inclusion, we need to ensure that there are sufficient, money in the hands of the people actually, so that they can take care of their well-being. From well-being to empowerment, that empowerment will actually, enable through API. So let extends more and more decision-making power to the people, from speed and scale to secure and trust, and from regulation to self-regulations. So going forward, these will be the issues where we require more and more discussions, deliberations, and as I'm saying that, AI will take us to a different level what we stand today in terms of delivery, in terms of improvement of the business performance, and in terms of making that the satisfaction level of getting those services. But going forward, the quantum will actually bypass the potential of AI, and will be having a lot of challenges going forward. So we need a lot of focus, including R&D on deep tech, quantum proof, solutions to look at our service delivery mechanisms probably from 10 years now. With that, I will pause here, and I once again thanks Business World to give me the opportunity to speak. And last and list my best wishes for all to have a engaging discussions going forward. Thank you all.
Thank you. Thank you so much, Dr. Abhijit, for your address. Moving ahead, it's time for the first panel, which is on Beyond the Balance Sheet. New career pathways for finance leaders. Well, let's have the stage up. I'll introduce our speakers for the same. Up first, Dev Tripathi, CFO for Indian subcontinent and for growth region image guided therapy Philips. Joining him is Rahul Ahuja, Group Chief Financial Officer PDS Limited. Joining them is Suman Hegde, Chief Financial Officer Jubilant Foodworks Limited. Joining them is Aditya Chamaria, CFO, Legal and IT Head, Bimbo Bakeries India, Grupo Bimbo. Also joining them is Sachin Gupta, Chief Financial Officer, LT Food Limited, Dawat Basmati. Also joining them is Deepak Khetan, CFO, AstroTalk. And this one will be chaired by Ajay Kapoor, Chief, Regulatory, Legal and Advocacy, Tata Power Company Limited.
Good afternoon, ladies and gentlemen. Special thanks to Dr. Batra and Dr. Fukan, who took some time on explaining the rationale behind this forum and what's happening in the country. Today's first topic that this panel is going to address is about the future challenges for CFOs and how the finance function is evolving in the recent times. Now, what we can see is that we have already overshot the time. And therefore, we won't stand for very long in your way. We'll try and conclude this session on time. My colleagues who are from some of the best companies in the industry, we'll start with them. Now, the first question that comes to mind is how the finance function has moved from cost guardians to strategic growth partners. Now, as you can see, the finance function has evolved, especially for someone like me who's been in the industry for 40 years. I've seen it changing over last 15, 20 years. There's been a tremendous change in the finance function from being number crunchers to strategic partners with CEO. We have moved, we have become the capital allocators. We have become strategic partners to operations team. We have been monitoring businesses. And ultimately, in many cases, we have graduated to become CEOs of the company. So for the first part of it, on how this function has evolved, I'll request Dave to throw his views to the members of this forum and let us, enlighten us on what he feels about it.
Hey, thank you, Ajay. And I have a sore throat, so please pardon me for the voice. Uh, hope I'm audible, right? So most of the time, it is the CFOs have been associated with the cost cruncher or the cost guardian. I'm not sure why, but maybe because it's been a comfort zone for the CFOs for quite some time. Uh, when I say comfort zone, that comfort zone has also come because that's the expectation set for traditionally on the CFOs to take the difficult task or being the least populist decision in the organization. But today, when I see the CFOs, they have emerged as long way they have gone. They make more forward-looking activities than digging into the history. When I say forward-looking, there is a significant time which goes in forecasting, scenario planning, as well as resource allocation. So if you'll ask me, where I spend maximum time, Ajay, today is that it starts with my portfolio assessment, that where does my portfolio stands in these three buckets of evolved, evolving, and futuristic, which exactly mirrors something like a core, adjacencies, and future bets. And how do I as resource all these three types of businesses? And the second one is that where also the finance, especially where I spend maximum of my time, is the effectiveness of our go-to markets. How are we effectively and efficiently reaching to our customers in the most cost competitive manner? So these are the places where we spend time. And that's where I say that finance has moved along from a cost guardian to certainly a growth partner to the CEO.
Yeah, I agree with you. That's what I said. Probably we are, partners not only to the CEO, but also to the operational teams. We are helping out with logistics, pricing part of it, the costing, and therefore providing a crucial support to the businesses. Sachin, what is your views on the subject?
So, Ajay, you are right in that sense. Still, I recall 23 years back when I joined this company. So I am a CFO at LT Foods, Dawat Basmati. That is $1 billion. Then my boss's KRA used to be uh, timeliness, accuracy, how accurate the financials would be, how timeliness the data can be presented, how things. Now the KRA has totally got shifted. Now my KRA is value creation, a sustainable, responsible value creation. From that ways, the companies, the status and other things, the what we are thinking now as a CFO, we have to think beyond the numbers. The numbers, the kind of things previous speakers were saying, the digital aspects. The digital has taken away the numbers. The numbers, yes, they are the important factor in deciding upon the things that might be the digital things. There are things, there are the concepts like talk to the data, talk to the things, AI and AI ML and other things are getting into. How well you are equipped into that, how well you can sense a thing, how well you can project things in a rightful manner for the business to grow. That is most important and critical in this kind of dynamic environment. Being in this basmati rice company, I am there. So all kind of turbulence, right from the turbulence and any kind of turbulence there are currently also. There is some kind of things that being maximum, my 45% of the export sales happens to be in the US. Recent times, Mr. Trump is very kind to me. So every day there is some kind of news that wakes me up. So numbers doesn't matter. Yes, they are there, but the future aspects, that is more critical. You have to think beyond how I am creating value for the overall stakeholders, the overall things that has taken place.
uh, that's the earlier culture used to be just projections, which we used to call plans or budgets. And now with this evolving landscape,
Correct.
Things change every day.
Correct.
Yes.
Correct.
Now, second question which comes to my mind is what tools and KPIs can measure intangible assets like brand, innovation, and talent? Well, for someone who started his journey at a time when PCs were a rarity, computers had just come to India. I'm talking about late 80s. And then to a time when I was the CFO of a newly started company, and I found that we were totally lost without computers. This was early 2000. I couldn't, think of working on manual systems anymore. And first attempt when we started this company was to implement Tele. And within probably 4 months, I found this was too restrictive. We had to graduate to an ERP. And that's how we implemented SAP. Uh, then for purpose of evaluating the KPIs, particularly for brand innovation, capital allocation, monitoring businesses, and talent part of it, we adopted balance scorecard. In fact, it was considered as one of the best implementations in India at that time, and we won the BSc award way back into early 2000s. Uh, Again, when with the advent of technology, we found that newer systems were available to monitor brand innovation, talent, something like SAP success factors, something like now with AI coming in, digital innovation, and monitoring innovation, capital allocation, monitoring the retention of talent. And then companies, based on these inputs, plan their journey forward on how to retain talent, how to encourage innovation. Today, these are the buzzwords, at least in my group. I work for Tata Group, and Tata Group innovation and talent retention are two biggest issues. And we work very hard on it. Third question which comes to mind is how do finance leaders support bold innovation, because that requires money while maintaining fiscal discipline. So I would request Suman to throw some light on this aspect, followed by Aditya.
Thanks, Ajay. I think, whenever somebody says innovation, they fear to come to the CFOs because they believe the CFOs will always say no. And it's always the and, right? I mean, I think the CFO's life lives on a balance of, revenue, profit, um, cost, capital, courage, compassion, I think all of it. And part of it is innovation and fiscal discipline. But having said that, I do believe businesses in today's environment, Indian, global, cannot exist, will not continue to survive without innovation. And it's not about innovation of product, right? It's innovation about capabilities, innovation in talent processes, innovation in systems, and all of it requires capital. And of course, fiscal discipline is important. And the reason why the question comes, I believe, the reason why this question even exists is because there's an inherent belief saying that innovations means it will be detrimental to the P&L or the cash flow in the short term. And hence, as the CFO's role has evolved, I think, given how much we understand the importance of innovations for the, for the basic survival and thriving of the organization, balancing your fiscal discipline means an innate or an immense amount of planning that needs to go into it, right? So you will have to figure out how to ring fence your capital allocation to ensure that we support these innovations? Because in the quest for short-term goals, and I sit in a listed company, so of course there are quarterly targets and there are a lot of short-term investors in the market today, but you also know that you have to run this organization for the long term, for your key strategic stakeholders and your shareholders. So planning, I think, is very, very important when we think about how do we support innovations as the finance team, as the finance head for the organization, planning on capital allocation very diligently. Once you've planned for it, and I always say that's 50% of the job done, how do you put frameworks in place to ensure that you're not only reviewing and governing where this capital is being spent, but also looking at the modularities and the KPIs to assess if this is not going in the way it's supposed to, you can quickly reallocate your finances accordingly. And then also to build that discipline within people within the organization across, not only in finance, but more cross functionally. I think Ajay said that you're not only partners to the CEO, you're partners to the operations team, to the HR team. How do you build that understanding with cross-functional teams on how do they evaluate innovations? How do you look at paybacks? How do you look at the return on investment? How do you build the commercial acumen of saying, what does return on capital employed mean? And as recently in one of these sessions in ISB, where we're teaching cross-functional leaders, right, on how do you look at return on capital employed, a term that's not often used, but very, very critical when you look at fiscal discipline or financial discipline when you're evaluating innovations. So yeah, that's a bit from my end. Thank you.
Hi. So I guess, Suman, you have covered most of the things. But, maybe I would just brief that perhaps innovation is not the requirement, but innovation nowadays is a survival. We all know we have the examples of companies like Xerox, Kodak. Everybody would take away with you everything in case if you're not innovating. For me, like the new competitor after 5 years are one which are not born yet. So we need to keep evolving, keep thriving for ourselves. Whether it's a company, whether it comes to our functions as well, it's all about innovating. We all talk about jobs and others things when it comes to AI. So I think it's a survival for every company. It's a survival for every functions. And we as a finance partner needs to partner the business growth, which means that taking a weighted call, as it just mentioned that innovations is all about future growth. We need to participate in that, learn. But what is critical, what I've learned in my life is you never measure the depth of a lake with both legs inside. So you need to know where to draw the line. We should learn fast and fail fast and apply that in a recurring, regular innovation part. What's very critical for following a financial discipline is that once you have made a mistake, whether it is innovations or whether it is taking any new call for the organization, we need to learn from the mistake. If we are repeating the mistakes, it's a decision. And a decision to make a mistake is a crime. So perhaps I would say that we need to innovate, but we need to always be cautiously optimistic for that.
Thank you. So what I realized through journey of innovation in my group was it's not just product innovation. Product innovation is one part of it. Process innovation is something that drives in money. It brings in efficiencies, and that's how we've been able to survive. It's a 100-year-old group, and we've been able to survive profitably over the last 100 years. Now, the next question which comes as a finance leader is how we have evolved as trusted advisors in boardroom strategy. As someone like me who sits on 6-7 boards now, and who has always been interacting with boards in my role as a CFO, I've always realized that CFOs have gained a new respect now amongst the board members. We were designated by the Companies Act 2013 as KMPs, and we have become important in our views. Our board respects our views. We are taken seriously, unlike past when our job used to be just to present accounts. So things have changed. So I'll request Deepak to throw some light on it. Deepak, sorry.
No, as you rightly said, right? So I think the CFO in a boardroom, right, is not seen as somebody who is just kind of presenting the numbers and all, but somebody who's also expected to give insights, what went wrong, which is always you can present, but what we could have done to make it right, right? I mean, what are the insights? What are the environment which is kind of, let's say you can look at whether in terms of regulation, compliance, whether in terms of the newer markets. So the board will now look at or expect the CFO as a role or a function, not only just to, let's say, highlight the issues with the balance sheet or the P&L, but where we could have done better, what more we can do, what are the newer areas which one can look at. I mean, one of the classic, at least, which I have always faced is, given that my background as a banker, which is always on a buy or build story, right? I mean, whether you spend 3 or 4 years building something or whether you end up buying. Now, it's a very critical and a delicate balance in terms of the capital allocation, the resource allocation, and also the board does expect inputs, insights, and let's say a recommendation as well as to how you guys think about it. And so that with that, they can also take an informed decision around that.
Well, yes, quite a good points covered. What I would just add is, in short, it's all about your SWOT analysis, understanding the strength, understanding the weakness, looking about the opportunities which exist, and a thread through which we all put it together. The second point which comes to my mind is that why we are the true advisors when it comes to the board. It has to be two part. One, how do we do the storytelling together? It's very important that we understand what we are betting for, which means that to be realistic, or as the word says, it's very important to be cautiously optimistic, makes really the difference. And I guess it's always very, very important. What I have learned in my life is that you cannot be in a boardroom with only one plan. You need to have at least plan B, and if possible, plan C. But there doesn't exist only one route to the map. There has to be plan B and plan C to work around and get the best out of it. So perhaps for me, that makes you a very good trusted advisors who needs to stitch the opportunities, futures. But what I've learned in life is that it is important to accelerate in the, in the journey. But what is really very critical is that you don't get off track. If a train gets off track, it takes quite days sometime to put it again back on the track. So important to be on the track, cautiously optimistic, but be in the present while looking for the future.
Thank you. Next question which comes to mind, and which I, in my earlier days as CFOs, used to face, there is a delicate balance which exists between challenging the CEO versus aligning with him as a partner. And this is such a delicate balance because you would have seen the number of CFOs who faced imprisonment in past, especially in the earlier years of corporate governance, that we found that CFOs were targeted and they faced the music. At the same time, you have to align with the CEO in a manner that you support growth, you support profitability, and you are able to take the business where it should be. I would request now Mr. Rahul to throw some light. Yeah.
I think, this is a very, very important dynamic that, we all as professionals experience in our day-to-day functioning in our companies. If you go a couple of decades back, the CFO role was largely maybe, let's say, 50-60% accounting and bookkeeping, 20% that of a leader, 20% that of a protector. I guess in today's dynamic world, these percentages have just reversed. A CFO is expected to be, a leader, at the same time play that protector and, role of custodian of financial statements and financial accuracy. And increasingly, there is that need to do the balancing act between the challenger role and at the same time drive alignment with the CEO and the larger organization. I think there is no science or a mathematical formula to do this. It's all about mindset. One needs to draw the boundaries. Challenge is valuable only when it's protecting some long-term value creation or driving long-term value creation. Alignment is essential when the organization commits to a particular strategy or direction. Uh, a CFO need not be the CEO's contrarian all the time or the cheerleader. The role of a CFO is to be a custodian and drive sustainable value. And I guess, what comes to my mind is how do you do this? Easier said than done. I guess in the role of a CFO finance function, you need to ensure that you challenge assumptions, you don't challenge motives, because then that gets personal and distorts, the pitch completely. Once the organization has decided on a particular strategy or a path, then you throw your weight behind it, rather than, there's no need to act as the opposition party, like, in our country, we are very used to. So you need to ensure that once a decision has been taken, there's alignment, you as a senior part of the team, throw your weight behind that and ensure that the job gets done, whether it's your role of, raising capital, mobilizing funds, the KPIs, KRIs, or, driving any other metric to ensure the, project or that transformation is successful. Also, I guess another important thing that comes to my mind is one should know when to push back and when to lean in. When it comes to the risk posture of the company or ethics or what the company stands for, long-term value, and if that comes at risk, obviously you start playing the protector role. But otherwise, it has to be ensuring that if there is a particular project which requires the whole might of the CFO or the finance function, then you lend that support and ensure that everybody is aligned and drives in the same direction. So I guess these are the few things, Ajay, that I would say.
You brought in a very interesting perspective. In fact, the point that I was trying to raise was what I faced in my initial career as a CFO. So while you called it pushback, I'll call it conflict management. How do you handle that conflict with the CEO as a CFO, where you need to protect the interests of the company, the ethics, the values, the integrity part of it? So would you like
Sure. So, look, this honestly is a tricky one, which I'm sure all of us probably go through in our daily lives, right? And this becomes far more trickier. I mean, when let's say the CEO is a professional, as against if the CEO is a promoter as well, right? So that's another aspect. And I guess most of the points well covered. But the point is, it's basically the mindset and the balance that you kind of need to maintain. And to my mind, the one thing which is very important is that you need to win the trust of the person, right? And as long as the organization and you are aligned in terms of the long-term objectives, the conflicts, yes, they will come. Will you have to stand up against? Not necessarily in public. You can probably try and resolve it in a one-on-one discussion instead of trying to make it a public discussion. And that's how you end up balancing it. So as rightly said, there is no probably right or wrong answer. It's largely situational as well. And this needs to be managed. And once you manage, that's where the long-term objectives of the organization and yours get aligned. And that's where you look at the success of the organization.
Thank you. Coming to the next aspect, which is how finance leads during crisis movements. Some light was thrown by him when he talked about the tariffs which were imposed by US, and particularly for his business, where 40% of the business comes from US. Uh, so I'll request again Rahul to throw some light on this aspect.
In my career, I have seen uh, disruption in two of the jobs that I've worked in, and it's never very easy to navigate when there is chaos. But I guess finance as a function is what everybody looks up to, when there is volatility, when there is chaos, when there is uncertainty. And finance in a way acts as, the shock absorber. You need to present a path of stability. You need to keep the relevant stakeholders, and stakeholders could be the board, it could be investors, it could be your bankers, at times customers, surely employees. You need to ensure that you are updating them, communicating with them regularly, and conveying that things are moving back to normal. At the same time, I guess, whenever there is volatility, chaos, or disruption, it also, the CFO should also, or the finance function, I would say, because it's a team end of the day, should also clearly seize the opportunity and distinguish between fat and muscle, right? You need to trim the fat for sure, but at the same time, ring fence the muscle. What is the muscle? It's what your company stands for. It could be your product. It could be, the basic pillars on which the company thrives. I think in these times, communication is the key, because communication brings in transparency. Communication ensures that the panic that sets in is taken care of. It lends credibility to all the stakeholders. And I think eventually when the tide turns, it puts the company in a very, I would say, good position to bounce back and ensure that, you deliver your objectives. So I guess also, one Ajay, important thing that I've realized is that at times our function needs to be an opportunist as well of disruption, because this is the time when the organization is most amenable to call it restructuring, call it resizing, you can look into your existing processes and systems and bring about a change. So I think it's also an opportunity at times to drive home better processes, systems, and way of working. It could be operating model as well. So that's the way I look, at a disruption and what the role the CFO can play.
Correct. You are Rahul in that sense. Just emphasizing on your point, na, recent times, as I was speaking, there is a tariff, as you all know, US government has imposed a 50% tariff on all the products that are being imported in the US. Apart from that kind of risk, it gave me an opportunity as well. The kind of size of my company, I am the leader. I am the leader in the US. Almost 55% of the basmati rice sold in the US is being done by my company. It gave me an opportunity. The smaller players were not able to absorb that kind of duty. Because of my financial strength, this 55% now has increased to 70%. So every kind of disruption gives an opportunity as well. How you look into it, you need to balance it out. Yes, your balance sheet, as said, should be strong enough. We need to have a strong balance sheet. That gives an shock absorber. You need to have a popular brand. That gives a strong shock absorber. So at times, apart from margins, how you look forward creating a market share, increase in the market share. That gives me an opportunity. You might have, as you know, for acquiring a customer, you do all kind of promotions. But this kind of opportunity gave me it gave me an opportunity for acquiring a new customer, giving me a seek in the homes of the household. So this kind of opportunity might not come. So it is a blessing in disguise in that aspect.
Correct. Now coming to our last focus area, which is where do we move on? What adjacent domains like policy, venture capital, ESG, digital leadership are natural step for the CFOs to move on? And I'll request Deepak to, I think, throw some light on this.
So, okay. So when I look at, let's say, the alternate carriers, I think, Ajay, what you rightly mentioned in terms of the areas, right? Whether it is ESG, whether it is policy, I mean, there are enough colleagues, honestly, may not become a CFO in another organization, but they have started their own CFO advisory practice. People have done, let's say, the financial transformations and all. So as a CFO, apart from the finance domain, investment, can you be a, let's say, a diligence expert in a private equity fund or a venture capital fund? Yes, you can. Why not? Because you have been so closer to the numbers, you have been so closer to the operating metrics and also the understanding of the business and the organization, right? Other than that, there are ESG functions while it is still evolving and probably the CFOs are the best place. There are IPO advisory functions which people have taken up, right? So multiple dimensions, right? In a career, let's say, which spans 10, 20 years, you have gone through numbers, you've gone through compliance, you've gone through business metrics and also depending on the person and the mindset, one can variety of, let's say, roles later on.
Similarly, you know how you transition from a CFO to a CEO or say an MD position. So Deepak, would you like to throw some light on this? Oh, sorry.
You can
continue on that CEO transition.
So that's a tricky one, honestly. But again, look, as a CEO transition, now, once you have played your role as, let's say, the CFO for last few years, right? I mean, you understand the business and it's each and every function of the business, some for one way or the other fall into your lab, right? I mean, whether through the numbers, through the compliance, through the growth and everything. So are you in a place to become a CEO? Yes, you are. Now, how do you take up that role? Of course, that's personality. That's also a drive to kind of, let's say, have a vision of growing the business to from, let's say, 1 to 100, 1 to 10, whatever you want to call it. So, yes, I mean, there will be always be a competition. Can the sales guy, who is typically the sales head and all, who will be expected to become, let's say, the next CEO, you'll have to then challenge them in their own domain and all. And that's where the transition can be.
Yeah. So I guess, that's the first and the best alternate for CFOs as an alternate career for me. CFOs became CEOs. Let me give some numbers. In FTSE 100, almost 1/3 of the board has been constituted or represented by the CFOs who are from the finance background as a CEOs, right? So for me, it's a journey what we all should look forward to. I guess we already have few of the basic dimensions which is required for it. Nobody should be able to do better capital allocations, risk management, the business continuity plan than us, right? We all understand very clearly that a top line is a vanity, a bottom line is a sanity, but a cash is a reality. Now, with all these things under our belt, which we can understand very well, I think there are only few basics learnings which we need to adopt to move to this journey. For me, first things comes about a phrase which I really love quite a most in my life. We all do things right in our right. So right, there's a difference of doing things right. We all do things right. To move to this journey, we need to think through that what are the right things to be done in life. And there's quite a difference between doing things right and the right things in the life. So we need to look in this journey, what are the things which we can look about beyond the numbers? It's not about the numbers. Numbers are the outcome of the assumptions. Let me give you a very interesting story. once the HR head went to the finance department to say, okay, we are going to recruit or we are going to give training to so-and-so people. And the answer was that, okay, what if we, from the finance side, generally, typically, the answer was that what happens if we give them the training and they leave after that? Obviously, yes, there's a risk involved, right? So there's no second doubt about it. But a CEO thought process would be always that, what happened if those guys stays back? Is it worth to have an untrained employees with us rather than taking a bet on whether I train an employee and if they leaves, right? So it's all about thinking of the future. Numbers are the outcome. We need to think about how we are contributing to that part. So that for me is really very critical. Assumptions, look into the assumptions, look into the sales building blocks, look about the marketing ROI, ROS, the cost of acquisitions. Those things really matter. Numbers is like an outcome, as I said. So I think that's the really very critical part. And second is all about people management. So perhaps in my journey, what I have learned is that we are very fascinated about, the P&L, as we call it, the profit and loss account. But for the CEO journey, the P&L, I have transitioned into people and leadership, P&L, people and leadership, and just not profit and loss account. Similarly, balance sheet is not BNS. For a CEO, it has to be balancing the sides because it's very critical that how do you work along the people. It's never about taking a stand or taking a call that, okay, this is what it is. Sometimes, obviously, we have to, but that has to be a later stage. We need to first see how we are balancing the sides and taking the people together. Because as there's a saying, the fastest speed of a group is what the slowest person in the group is all about. So I think those typical few things of thinking beyond, thinking what are the right things in the life, working beyond the numbers of the assumptions, working on the people, working on your individual presence, interacting with more and more outsiders as well as vendors, making the stakeholder management are really critical. But one last baseline for all this is that how you navigate yourself, how you become resilient. It's all about compartmentalizing your issues into different parts, not carrying from each other, and staying cool and calm. So I think that's the fundamental, and that should be the alternate career and the profile what CFOs should look forward to.
Very well. Last question, and we have just 2 minutes left. So, so what do you see as the legacy that we can leave for future leaders of future generations in terms of, our experiences as seasoned finance professionals? So I'll request Suman to say a few words. We have limited time. Suman and Dave or Aditya can throw some light.
I think all of us feel nice when we leave legacies behind, right? And legacies are it basically says that when you leave an organization, what stays, and that actually defines a good leader. I always say, the best leaders are the ones who can train their people to make themselves redundant, because that's the legacy you leave in people. So I think going forward, and we were, just having a conversation before the session started on the talent of today, and the finance talent of today. I think one of the biggest legacies as a finance leader that we can leave behind now is actually build a learning culture, build an organization which is enabled, which can take your company forward once you've gone behind. So what's the talent you need? What's the new finance functional organizations? Because structures and organizations are changing. I sometimes dread to think what finance function organization structures will look like 10 years down the line with the way digital is taking over the world. A lot of the jobs of finance actually are getting disrupted, right? So one of the key legacies I think as a finance leader would like to leave behind is a talent which knows how to learn, relearn, and upskill constantly. Second, in terms of digital infrastructure and automating processes, which enables a company to scale without you, just as well it could scale with all the brute force that with your traditional ways of working, we would have put in the past. And the third and last one is building really sharp performance frameworks for the company, because what you track is what you deliver. And I think finance plays a key role in ensuring that the organization, the entire executive committee has the right performance frameworks, which will keep it in good stead in the long term. So yeah, those are my three bills.
Yeah, let the alarm goes off, then we'll. Yeah. Okay, so quickly, three things. If you'll ask me, what I would like to leave as a legacy is that a compliant organization, a more efficient finance function. If I when I leave, whether it is digital or any process improvement or anything that leaves a very agile and efficient organization. The third one will be that how have I left or invested in the future bets. So these three things I would love to be known for or remembered for. Whereas in a personal note, if you'll ask me, I would like to see a successful CFO who creates more CFOs for the future.
So this brings an end to this panel, and I'm sure you would have learned some few things from this esteemed panel that I had, the seasoned professionals from various companies. And I would thank you for being a very patient listener. I know after lunch you are waiting for your award, so we'll not take your time more. Thank you. Thanks a lot.
We'll do a group picture. And thank you, Ajit, for moderating it. Thank you so much. Thank you. Thank you so much. Many of our speakers spoke about AI and the future. The next one is a topic that is specifically on that AI in finance, accelerating adoption with trust and with compliance. To share their views on the same, let's please welcome our panelists. The first, Hemant Kumar Roya, Country Manager, Subcontinent, India, DP World. Joining him is Akshay Jain, CA, Group Chief Financial Officer, Mensa Brands. Joining them is Arvind Talan, CFO, Energy Efficiency Services Limited. Joining them is Sanjeev Bhatia, Chief Financial Officer, Blue Pine Energy. Joining them is Sanjay Aneja, Chief Financial Officer, DS Group. Joining them is Sanjay Gandhi, Group Chief Financial Officer, Pearl Global Industries Limited. And this one will be chaired by Vikas Wadhwan, Chief Operating Officer, REA Cyber City. Let's please welcome them to the stage, everybody, with your applause. Thank you.
Good evening, everyone. I think after an exciting discussion about the future path for finance professional, this is a very relevant topic. While we are charting the ways for future path, I think we all agree that there is no future path without AI. And I think on a lighter note, don't want to offend anyone. This is the right topic for this forum and this panel because artificial intelligence, I think we all as finance professional know how to use it, and we have been using it very effectively for the last so many decades. Now people are learning how to use artificial intelligence. So, but moving on, just to kind of with the topic finance it's no longer just kind of scorekeeping, right? It's all about how do we partner with the business, how do we provide foresights, and now we are at a very interesting juncture when the world is changing very rapidly, not only in terms of the business cycles, but also in terms of how the AI is changing everything what we do in our day-to-day life, not only in finance, not only in business, but in our day-to-day life as well. So this will uh, ask a lot of questions. And right now, we're going to keep the focus on the right questions for the finance leader. And as finance leader, while we are expected to move fast, we also need to deliver sharper insights. But at the same time, we need to protect the trust, right? So how do we balance all this in this new AI era, right? So we're gonna talk about this with a very interesting panel. We have very experienced panel with us sitting right next to me. Hemant, I'll start with you. The very first question. AI is being positioned as the future of forecasting and reporting, right? But do you believe that AI will outperform human judgment? And if so, in which areas? What's your sense?
Namaskar. Thank you, Vikas. You know, you've set me thinking. I can afford the ask the same question here, but I can't go back home and ask the same question. Ki, is my wife better or am I better? Okay. You know, you can say it here and I will entertain you. But the moment you say it at my home, I'll say, boss. Sorry. No, so I think the analogy here is एक सिक्के के दो पहलू हैं. So neither can be better. They have to coexist. Because even if you take this analogy forward into practicality of AI, one thing that stands out is what can AI do? I mean, if you do a very ruthless pros and cons, then AI can handle large data sets. It can handle complex data sets. It can do repetitive things very fast. Okay. What it can't do, it doesn't know ki if one gentleman imposes 50% tariff, like the earlier panel said, what should be my response? It does not know that if he had said the same answer at my home, how would my wife have reacted? Okay, it does not know that. It does not know what am I feeling here, sitting, thinking कि भाई इसके बाद क्या करना है. That it will never know. So there are things which AI can do, but there are things which only natural. Remember, that is why it is called artificial. It's an artificial intelligence. It is not natural intelligence. Natural intelligence is only God-given. So there is something which the artificial intelligence can do. Like I said, data sets, heavy data sets, complex, speed. But what it can't do is natural thinking. Logical, it may still do. But natural thinking, understanding that emotion, where if the national anthem is being played, that feeling that comes here, those goosebumps that you get, that it won't know. So both have to coexist, and it's not either or, but it is both. And the real benefit will be when what is the output of artificial is checked by natural. Well, believe me, I'll give you one more analogy before I pass the mic. these two that I have here, which I'm pointing to, are my natural eyes. A lot of us have at least one or two phones which have artificial or man-made eyes. You capture a photo with your eyes of the natural beauty, and you capture a photo with one of the phones that you're carrying, or possibly a DSLR. What remains in your memory? 10 साल बाद ना, even if you're a very tech savvy guy, you have digitized all your photos, you will still need to go back to the photo to open it, to see it. But that memory which you have captured with your natural eyes will remain embedded forever. So all in all, both have to coexist. There ain't one answer, but both have to exist. And when you work both in tandem, and I'll have a lot of HR people eating out of my hand when I say, when both collaborate, that is when magic will happen.
No, very aptly, Hemant, as you rightly said, logical intelligence may come from AI, but the natural intelligence has to. So that's where human and AI has to work hand in hand. But on a lighter note, if me and my wife both are using AI very, very regularly, then AI keeps on building the context of the individual. Then the AI may tell me that how my wife is thinking. Leaving that aside, coming to you, Sanjay, that if you have to pick one finance process where AI gives, because as CFOs, we keep on asking ROI in every damn thing. So if one process which needs to be automated using AI, which gives the fastest ROI, which finance process you're going to pick?
Yeah. Now people are talking quite a lot about forecasting, about strategic thinking through AI. But if we talk of the fastest ROI, I will definitely choose AP, wherein all the invoices are being taken into the system directly. They are voluminous, those are repetitive, and those attract quite a lot of manpower. So my thinking would be that I do the AI implementation for my AI, where I can schedule my payments directly to the banks. And so it starts from end to end. And the benefit, as you asked, ROI is very, very fast into it. You can straight away measure to the P&L, and you can identify that the risk which we were carrying when we were having people using this, because it will bring in exceptional reports, and exceptional reports can be straight away seen into that there is no risk, duplication or fraud, because it will be able to catch hold of fraud in a very, very fast manner. People generally things get mixing that OCR can also do that. But the matter of fact is there is a huge difference between OCR and AI. OCR is just a reader. It will convert the text into the format you are looking forward to have, wherein if you make a minor change in the invoice, it will not be able to read, and everything would come as an exceptional report. But if AI is there, it knows the behavior of the vendors. Even if the invoices are being changed, it can straight away capture, and it will create the credibility of the organization. It can take the discounts. It can catch hold of the frauds. So I will definitely go for AP for the faster ROI. And then since it is the process which can be straight away seen. So once this is being, okayed, and the people are becoming accustomed to adopting this, using this, then gradually I'll go to the other processes wherein we can't see the things directly and we have to rely, because it is going to make a trust. So beginning with a small step and moving forward in a phased manner. This is what I will go for.
And if I ask you which is the process you're going to automate the last, which will that going to be?
As Hemant mentioned, there are which is to be done in the last. This is what you
Correct.
are asking. As Hemant said, that wherever the human judgment is involved, you know, you are signing up the balance sheet, you are looking the audit reports, you are making the provisions, you are doing the closings, where a lot of human judgment is required. Behavior of the people needs to be seen, skills of the people needs to be read, desires of the promoters and stakeholders. It can't be done until and unless you have got your own judgment. So those things which are pertaining to signing a balance sheet, closing of the financial statement, making the provisions, doing the impairment, all these things, I would like to keep it to my judgment and will identify and get the indicators through the AI. But nevertheless, final call would be of mine. And this will be the last process where I will go to implement it.
Interesting. Thanks. Thanks, Sanjay. So, Arvind, the next question, which is a segue from what just Sanjay shared. I mean, I have moved from CFO role almost 15 months back, and I've not done monthly closing for the last 15 months. And in fact, there was very interesting conversation I was having with some of my friends, because now I'm part of the global tech team in my enterprise, and there will be a shutdown we're going to follow from 24th of December to 5th of January. And all the finance folks in our company was crying that, okay, we have to do the quarterly close and all that stuff. Do you think that in this AI era, the way we do our monthly and the quarterly close will change completely, or let me just stretch it a little bit more and say the monthly closing process or the quarterly closing process will be eliminated as we do it today?
Thank you. I think that's a apt question, which is very much related to we all accountants, fortunately. Yeah, we are more focused about the monthly closing, quarterly closing. And I think Hemant has covered for each and every answer in advance. And I think knowingly you asked that question to him only. Judgments and then, empathy, and he has covered most of the things. But for me, I think in one word, in case I say no. AI cannot simply take away my responsibility of closing the monthly books or quarterly books. But at the same moment in time, yes, nowadays what has started happening is I am getting that MIS not monthly basis. Now I have started getting it on weekly basis. Now I have started getting it on daily basis. Or in some of the cases, it's kind of handy on my mobile phone. So I can check how much collection I have made till now, how much billing I have done till now, how much payment I have done till now. I mean, at least, but again, I'll not say it is AI, it's automation. Nowadays, I think for last 3 years or 3.5 years, we have started talking about AI, isn't it? After the chat GPT thing came into the picture in November 21 or December 21, whatever. Otherwise, all these things used to be done by automation, RPA. All these things were done by all these people only. Now, in case of my earlier days with my Mahindra days, we used to have one project called, C1. Means, let us try to close my books of account on day 1. Now, 5, 6 plants, supply chain and management, so many vehicles moving on the road, warehouse, this, that. But with the help of this automation, and obviously not AI, some part was done by automation, some part was done by, like my friend was suggesting, means your judgment, your manual intervention. So we have started taking some provision instead of on 31st. Let me take and try to close the provision on 27th or 28th day of the month, isn't it? But we were able to close on 1.5 days when I left or when I move over. But yeah, things have changed. Things are changing in a big way. After 6 months, we may be talking about some other concept also about finance, closing and everything. And, but for me, yes, quarterly, monthly closing will be done by me. Like you were saying, what is the ask by my promoter? What is the ask by some other stakeholders also? What is my risk mitigation strategy? What is my future strategy, which AI may not be knowing? But yeah, at least few of the things will be at my finger points for sure.
Absolutely. No, I completely agree with.
It's a very, very pertinent question and important questions because when everything is on real time basis, I will like to add what Arvind said very aptly, that if everything is on real time basis, why there is a need of closing? Need of closing is very, very important because you cannot pick anything as at. Your financial statements are being made as at. If somebody, regulator, GST returns, income tax returns, TDS, anything has to be done, that is to be done based on some closing number at a specific date. If that specific date is not there, the judgment Arvind mentioned are not exercised. You don't have those statements to submit to the authorities, corporate governance, board, and anywhere because judgment needs to be exercised. And the date as at date, the statements are to be made.
Very, very rightly said. But just to extend that discussion, if things are prepared on a real-time basis, it's available on a click of a button, we can apply any cutoff date and produce those reports.
Yeah, so cutoff needs to be there. So closing has to be there. Hard closing has to be there. It is fine. Your bank reconciliations would be made, your cash flows would be made, your, vendor's payment would go on its own. But at the same time, where you were at a point of time, you need to keep that in the track for disclosing, for making people understand, management understand, promoters understand, and so is the further stakeholder. Wherein you will have to have those judgments, which was your last question.
No, absolutely. So Akshay, now this brings you in the discussion, and at Mensa brand, you guys are doing everything with automation, very efficiently, running the entire operating system very, very efficiently. That's what I've been hearing, right? So if I ask you as CFO, which is one process in finance, you're gonna put your foot down in your enterprise that I'm not gonna automate, I'm not gonna use AI in this particular process.
Sure. Good evening. Uh, I think uh, I think a lot has been said. The base building. I think look, AI can automate execution. It cannot automate judgment, right? So I think there are multitude of areas within the the finance function itself, which involves a lot of judgment, right? And one of the areas which comes top of the mind for me is the purely the capital allocation, right? I mean, where you spend a lot of time doing annual strategic planning, right? I believe that AI can, with this level of historical analysis, etc., it can help you to enable the decision making. Right? You can take much more informed, rich decisions, which will help you. Your probability of success is higher, right? But it cannot tell you what is the market scenario, what is the competitive, let's say, the landscape, how it is evolving, how is the consumer behavior. Like, you just need to spot an eye. Had everything been based on data, I'm sure you would have never seen on Zomato app and rider, because this is not monetized, right? It's more customer and obsession, the love, right? So I think you need to see a problem statement from multiple lens, right? So I think I think all the esteemed panelists said, right? I think it's AI can automate execution for you, but not the judgment, right? So I think that's the key differentiator. I think going forward, I mean, of course, this topic has blown out of proportion, where we have started feeling, can AI in the long run
replace finance?
Replace finance? I don't think so, right? I mean, what I might feel is that even look, I think how the finance function has evolved over the years, from an hindsight to insight to foresight, right? I mean, and I think now with business finance, I think we are one of the key enabler, functions, right? Which I think we just need to have a lot more play in the foresight and insight, right? And that's where I think AI is going to play a critical role. It will never take away a judgment. Of course, I think what is your current org, you might have more leaner, agile orgs in the future, where a lot of, I think, the redundant work, or for the lack of a better word, gets automated for you. You just can sleep over a lot of things. But I mean, I think as a leader, you get paid for taking decisions, right? I mean, so some quality decisions. If you take one a day, just imagine how many good decisions you can take in your career. So I think that's my, point.
Thanks, Akshay. No, I think the consistent message which I'm getting is definitely we're going to get a lot of efficiency on the back of AI. We're going to replace a lot of mechanized or repetitive tasks, but the judgment will still be with the finance folks, which I agree to a large extent. But I think slowly and gradually, as we start looking at AGI, some part of judgment will also kind of start coming from the AI, but that's not the topic of discussion right now. But this actually is a nice segue into the next section, which is trust and transparency, right? While we all are saying judgment, 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 but I think on the back of it, we all are saying people are trusting us. They've given us this responsibility. Then how can we leave everything to technology and let those things go to either board or go to either GST department and so on and so forth. At the end of the day, we are responsible for it, right? I think, is it fair to say that we as finance folks are, and bear with me for the time being, resisting with this technology AI, not because of the complexity, but because of the lack of the trust in the system? Is it fair to say that? Because if we are taking something, let's say, to our board, and we don't understand how a large part of the data set in that board report is being generated using AI, will we be comfortable? Or if we submit that to regulators, will we be comfortable? Will our auditors start relying on the reports produced by AI, right? So that's the kind of thing I want to kind of dig deeper into. So yeah, Hemant, I'll come back to you. Accuracy and controls are two pillars on which is, I would say, quote unquote, the foundation of the finance function. If that's true, should we trust AI model we don't fully understand if its predictions consistently outperform human judgment, right? Where do you draw the line between black box intelligence and acceptable governance?
Sir, you have asked me a very philosophical question. सर, दुख को चुनो कि सुख को? अब ये मेरे हाथ में तो नहीं है कि दुख को चुने कि सुख हो. As someone said, dukh and sukh are like the two shores of a river. They flow along together. So I think our answer is also somewhere in between, because when you are getting into so much of complexity, and which AI is helping you to answer, it's very difficult for anyone to understand to the last level कि भाई एक वो Excel खोलो, F2 मारो, उसका हमको show me that formula. It don't work that way. Correct? So to that extent, it is what it is. Now it's up to you whether you want to accept it or not. It's like dukh. And I am very categorically saying that black box is dukh. I mean, you don't have a choice. Dukh aayega. In the hope कि sukh bhi aayega. Similarly, when the output comes, then if you're not going to use the natural intelligence which God has given you, to at least figure out कि भैया सही लग रहा है कि नहीं. There's always a gut. I mean, and as we have all seen that as we move on in life, data becomes a little less and gut becomes a little more. So your gut will tell you, से अपने भाषा में देहाती दिमाग बोलते हैं ना, that'll tell you whether it looks right or not. Acceptability over a period of time will come. to that black box. So dukh will be there. And you will have to accept dukh. You don't have a choice. But the point is, you will also have to see when is sukh coming. So when you use your natural intelligence and you realize that, broadly it looks correct. So imagine it's a model that it has generated. In your mind, you think it's correct. Then what will you do?
But
After
Hemant, sorry if I may interrupt you. I'm sorry I'm interrupting you in
please.
between. But just want to, you're right. Probably wo jab dukh aayega, some of us being the leaders may take a position and may take a call ki yaar ye theek lag raha hai ya nahi lag raha hai, and we'll take it forward. But the problem is, if the trust is not there in the system, my team will never going to bring it up to me. That's where and they will not going to take that call. How do we build that trust in the system that people start relying and using these new technologies, which are still evolving very fast?
As I said, you don't like dukh. You have to accept it. It's an evolution. You are not going to trust it immediately. And look, there will be biases also. What is AI? It is what is taught. If it has been taught a data set which is biased, then its answer will also be biased. And that's exactly where what I'm saying is where your natural intelligence comes. Okay, if I'll go back to my beautiful wife. If AI keeps telling her, boss, in the Western world, no, every 2 minutes there's a divorce. So it's quickly, every 2 minutes you must divorce him, otherwise you're looking at the wrong data set. I mean, you're looking at the wrong husband. वो करेगी ना, because उसको बार बार बोला जा रहा है, बॉस डिवोर्स कर, देख वहां हो रहा है. Those concepts of the Indian for life till death do we part, वो data set है ही नहीं. Correct? So it's not a choice that is being given. At some point in time, you'll have to accept it. Now, let's be honest, and I'm being a little, I don't want to get into a divide here, but सब कोई जानता है, everyone knows, it's an open secret that all your devices are listening. All your devices are listening whether we like it or not. All the privacy agreements that you sign and everything, वो आप पढ़ोगे भी नहीं. If anyone can stand up and say in this room that I have read through that 50-page agreement, मैं उसके चरण धो के पीऊंगा. Because all you will do is you'll keep scrolling down, जहां पर you'll click a tick and you'll say I agree. Okay, the devices are listening, yet you're still using the app. 1% in the world, 1% of the population in the world may have deleted that app. 99% are still using it. It's the same thing. It's a evolution. You will use it because it's dukh. You don't have a choice. However, how you use sukh using a natural intelligence is what you will have to come to the party.
So I was coming to you, Arvind, actually.
Vikas was very good moderator and very soft moderator. And I was about to say, in case of Vikas, it would have been my son sitting there because that's from new generation Gen Z. And he would simply say in one line, no, what you are talking about, dukh sukh, it is sukh only. I should not use my mind where that is not going to help me. Even I think 10 years ago, when that iPhone 4 was there, he used to ask, इसकी वो मम्मी पूछेगी बेटा जरा बाहर देख के जरा बारिश हो रही है, तो he would ask Siri. So that's the thing. But from finance side, I would say कि साहब देखो जहाँ पैसे की मामला आता है ना, तो हम भरोसा नहीं करते किसी.
No, but that's where the question is. So Arvind, let me ask you the next question. If there are now, Hemant ji has very rightly said कि दुख तो आ गया है. अब धीरे धीरे उसको हम कैसे सुख में कन्वर्ट करेंगे? That's the art we need to all learn, right? Now, we take something to either board or take it to the regulator, but there are certain material discrepancies, right? So as a CFO, you tell me who should be accountable. Is it the model? Is it the machine? Is it the vendor who has provided that AI model? The analyst who used it and prepared that report and given it to you? Or you are accountable for that?
I'm responsible.
Because trust.
नो ट्रस्ट नथिंग, पैसे का मामला है, आई एम रेस्पॉन्सिबल। मैं मेरी टीम को सिंपल बोलता हूँ, देर आर एन नंबर ऑफ रीजंस और एन नंबर मीन आई एम कमिंग फ्रॉम दैट सरकारी काइंड ऑफ कंपनी एंड इन केस आई एम टॉकिंग टू माय जीएम एंड सेइंग हे यार ये जरा देख ले, अरे नहीं सर, व्हाई यू आर टेकिंग दैट एडिशनल रेस्पॉन्सिबिलिटी, दिस वाज लुक्ड आफ्टर बाय दैट कमर्शियल गाय अर्लियर और दिस वाज लुक्ड आफ्टर बाय द परचेज गाय और कॉन्ट्रैक्ट गाय अर्लियर and then admin or HR mean n number of departments we have got. I used to always tell, hey, in case there is some system, there is some company, there is some kind of organization, whatever happens, everywhere in every process, money is involved. आदमी 2 मिनट लेट आ रहा है, मनी इन्वॉल्व है। 2 मिनट जाके बाहर चाय पी के आ रहा है, मनी इन्वॉल्व है। तो इट्स नॉट अबाउट दैट सबमिशन ऑफ द फाइनेंशियल्स ओनली। मीन मैं मॉडल को दोष देता रहूं कि मैं वो बेचारे वेंडर को दोष दे दूं, ना बाबा ना, आई एम रेस्पॉन्सिबल साहब, वेरी मच क्लियर। पैसे के मामले में आप किसी को थोप ही नहीं सकते जिम्मेदारी।
Very rightly said. What do you think, Sanjay ji?
Yeah, I think as far as accountability is concerned, that cannot be outsourced. Because if you talk of AI, it is merely a tool. It is a tool to support you, to recommend something, and your team is doing work on that. They are responsible, I'm using the word, not accountable. They are responsible for their operational efficiency, to follow the signals, whatever are coming, to follow the alerts, and to make sure that they are doing the work within that framework. But if you talk of that vendor has not given the right tool, vendor has chosen the design you have given to the vendor. He will make it, he will get approval from you. You need to verify the things first, and then he is free from that. And moreover, AI does not have any physical or legal existence who can be held accountable. It is only CFO who, by the virtue of the law, who by the virtue of the definition and framework all across the country or worldwide is responsible. Accountability cannot be transferred. It can be only facilitation you can take from the people in a bigger way, but you are accountable for that as CFO.
No, very well said. I think accountability cannot be transferred. It's the responsibility which can be shared with someone. But Akshay, you tell me, and right now I'm just focusing on trust. So when we are talking about trust, we talked about finance team, we talked about board, we talked about regulators. How about auditors? Do you ever think that auditors will start accepting the data or the reports generated by AI?
Look, I think I would, the way I would answer this is, I mean, that's a happy state. I mean, if that happens, I would look forward for the day when it really happens.
वो सुख वाला state.
So I think, look, I think the reality of life is AI can compress time, but it cannot compress accountability. I think a lot has been said here, right? I mean, you cannot outsource the accountability in the room, right? Within the finance domain, there are multitude of areas of it. Like, I mean, I touched upon capital allocation. There is more to it. I mean, how would you do your tax provisioning? I think, different companies on same topic or problem statement take different set of opinions, right? In fact, I think the accounting, even if you go, I think it's an art. It's not really a rule based. It's more a judgment based, right? And a lease classification can different in two sides of balance sheet, right? I mean, and the P&L of it, right? One, I mean, a same set of an agreement, two different views, right? So I think you cannot take away this beauty of accounting, the different levels of judgment across. I think what you need to define in your org is what is the one area which is the low risk and which is like high on execution, and you just automate that where you spend a lot of your time, right? That's where I think you can sleep over it, right? That's where I think beyond that, if you're doing let's say if you're doing a strategic acquisition, right? There are different levels of accounting which follows. What do you need to follow? There are different levels of tax. There is a FEMA, right? If you haven't so there are multitude of examples where the judgment is required, and that's where I think you need to play a role out, right? And I don't think so. I think AI is going to take away from us that. Of course, I think financials with judgments could be going to auditors, let's say in an automated way, but there will be a significant role and accountability lies with me.
Yeah.
Right. Like going forward.
So the trust is on all of us, not on the AI. That's the so quickly, just looking at the time, we are running short of time. But there is another very important, I thought we still have 1 minute. There is another important, very important aspect is compliance and regulations. And we've seen generally when a technology is evolving, regulations are always lagging behind because they need to see how the technology is evolving, how should we regulate it. And we as CFOs, on the one side, we are required to be champion of innovation. And on the other side, we need to protect the interest and ensure that we are not crossing the line from a compliance or a regulation perspective. So should one be looking at doing a wait and watch kind of a scenario for regulations to evolve? Or should one be taking a little bit more proactive approach where they say we will go for self-regulated kind of environment? So Hemanji, I'll start with you. What's your perspective there? And how will you do that? Because even most of us don't know how the regulations will going to evolve and what's right or what's not completely in this AI era.
Sir, I come back to natural intelligence, which God has given us. And if we use that in the right manner, we'll know that what is right and use self-regulation, basis the right path and move forward. Because otherwise, we're going all over the place. We'll start scratching our heads. What is regulation going to come? We'll try to play the regulation. We'll try to game the system. That's exactly not what a CFO should be doing, trying to game the system. He should use where there are no rules or where there's gray. He should lift the corporate wheels, so as to say, see what is the right path. And that's where you should be playing. That's your playing arena.
Very rightly said. Akshay, any additional perspective on this?
No, I think at the end of the day, I mean, you need to live it. I mean, there is a fiduciary responsibility with you. You cannot bypass that, right? I mean, and you just need to live it up and make sure that, the organization also lives along with you, right? And I think one of the key things I believe in is, I think the compliance, etc., is not the responsibility purely on finance. It's the responsibility of the company. That's the mindset shift. I think all of us, should move forward.
Arvind, Sanjay, any additional thoughts?
And the company is my responsibility for sure. और मुझे सबसे अच्छा फंडा लगता है ROC, be it AI, be it Gen AI, be it agentic AI. I think in case ROC is making some sense, and obviously fiduciary responsibilities, or in general we are human being, we know what is अच्छा, what is बुरा. In case it is within that boundary wall of अच्छा, and always we should do that ROC calculation in case it is making me some kind of benefit, be AI, be it कल tomorrow कुछ robotic का कुछ आएगा, कल को कुछ transformation कुछ नए आएंगे. I think after 6 months there will be some new topic we may be discussing. I think that ROC and that basic fundamentals of ethics, I think in case we are able to do.
I think financial controls, internal financial controls, frameworks, policies, regulations, all these are the responsibility of CFO. Even if something is coming or not coming, you are responsible ethically, principally, as a CFO for the organizations, because you have to safeguard the assets of the company and you are answerable to many authorities. So you need not to wait for the rules and should move on with their internal strong controlled built in the system.
Thank you. No, thanks a lot for sharing your perspective. I think it was very insightful. For me, the takeaway is, I think, which is a good part, that AI will not going to replace the finance professionals or the finance function. But I think the other takeaway, which I could gauge from this discussion, is the finance professional who will embrace this new technology will redefine the finance function. So I think that's what we all should be looking at. Thank you.
Thank you so much, and thank you, Vikas, for moderating it. A picture, please. Thank you so much. Surely the next one, it's on crisis leadership frameworks. Lessons from CFOs who've led through disruption. And to talk on the same, please join me in welcoming a panelist. The first, Svetlana Boldina, Executive Director and CFO, Nestle. Anil Suneja, CFO, Medtronic India. Joining them is Siddharth Khetan, CFO, ESME Consumer Private Limited. And this one will be chaired by Ashutosh Dhawan, Group Chief Financial Officer, Mankind Pharma Limited. Yes, please welcome them with your applause. I know we have few, but the excitement shouldn't go down. Thank you. Thank you.
Good to see you. Shall we? Yeah, hi, good evening, everyone. So it's really a pleasure to welcome you all, and it's a privilege to have a very diversified group. We have from FMCG, from medical technology, as well as beauty products, both from the Indian as well as the reputed international companies. So we will be handling three themes. So one is with regard to the boardroom leadership and decision making. Okay. So if we see, all of us know that the environment has been changing. There has been a geopolitical, transformational, as well as technological changes which are taking place. And because of these changes, most of the companies, they are either facing or they are about to face the structural transformational curve, which means that they are at a transformational inflection point, which means that they are facing two challenges. One challenge is to perform by way of consolidating their business. And the second is transform at the same time through innovation and finding high growth areas. And if there is a mismatch between the perform and transform, that leads to crisis situation. And accordingly, the discussions in the boardroom also revolves around that. So my question to Svetlana is that as you plan for 2026, what role do you think finance leaders should play as a strategic co-pilot to CEOs and the board during the moment of crisis?
Okay, am I audible? Yeah, good. Thank you. Thank you for the question. Look, let me travel a little bit back, maybe decade back, to think how the role of the CFO has changed since the years. And then I come to the crisis, because every day is a crisis, if you wish. I remember when I started my career in finance, and then when I evolved to the controlling and the CFO role. So our primarily responsibility was planning, reporting, accounting, tax, less advisory. So more like a backstage operations. And with the time, I would say decade, maybe a little bit more, we see how overall the finance director role evolved more to the business partner and the strategic partner. And respectively, when you're in the time of crisis, the role of CFO is particularly important in a sense that things as mastering the numbers, reporting, it's come as granted. What is important is the envision and the business insight that support and navigate the CEO at any time. And particularly it is required in the time of crisis. And we always say CEO and CFO is a pilot and co-pilot. pilot and co-pilot sitting in the same plane, and if plane take off, running, or if plane is crashing, both are dead. So respectively, it is 100% shared responsibility to run operations and manage the crisis. I can give you one funny, but it was not funny when it happened. The case that happened to me, I was in Indonesia as a CFO of Nestle in Indonesia, and it was I was 6 months in the country, and then COVID happened, and then it's coincided with a CEO resigned. CEO resigned 1st February, and 1st March we closed the office. And the new CEO supposed to come from Vietnam, but everything was restricted, closed, so he could not travel. And then the whole company looked up at me. How I'm going to manage, how I'm going to manage the operations, the factories, the distributors, and daily operations. And I was shocked. They definitely didn't expect that. I didn't know country so well, but the whole organization was looking up at me because CEO was remote. And the CEO was not familiar, not privy to the operations. And I had to stretch myself, again, a lot of wisdom along with the gray hair, obviously. So, but this is to demonstrate that CFO is number one in the crisis. If I come, maybe I have no time. Okay, I will.
No, yeah. No.
I told you 4 minutes.
Complete whatever you want to.
No, just quickly to say in India, when year and a half ago, what happened, you all know there is I would not call it crisis, but it's consumption, particularly for the FMCG dropped because of the high inflation, and there was a huge stress and happened almost overnight. And there was a huge capex pipeline for planning to increase capacity for us. And then we had to react so fast. We have to stop capex. We have to preserve cash. We have to stop pushing the distribution system to not overstock. It was such a fast reaction, such a important assessment of the ecosystem. And this is where the finance team played a big role not to be in the crisis, not to be in the deep crisis, if you wish.
No, very well said. So the message is that the CFO role has got changed from caution, which is protecting the value, to conviction, what you said, that in terms of preserving the cash, because conviction is something which creates the value for the organization. So building on that, moving on to the next stream is with regard to the financial resilience. So nowadays we see that the CFO is wearing multiple hats, such as the Chief Value Officer, Chief Future Officer, Chief Transformation Officer. But we would like to give one more title after listening to Svetlana, the Chief Crisis Officer. And we are living in the volatile world, and the CFO has to manage multiple stakeholders and have to navigate the organization through the crisis situation. So my question is to Anil, that basis your understanding, what crisis framework CFO shall ensure so that the cash flow stability and the cash preservation can be achieved without compromising on the growth of the company?
No, thanks for the question. So good evening, everyone. Pleased to be here. And I think you mentioned about the different names being given to CFO. Just picking on what Svetlana mentioned about, the role of finance is not just about back end, it's getting into the front end. It's like, it's Chief Facilitating Officer, Chief Crisis Officer is what you added. And perhaps I'll add, it's also Chief Chaos Officer as well sometime, because we got to manage crisis and chaos. And every day can be a chaos and crisis as well. But the fact of the matter is what's common in all these terminologies and why there is so much of reliance being stressed upon to the CFOs, because we as CFO know situational leadership. And we need to demonstrate that to manage crisis, to manage chaos, to manage risk, and to capitalize opportunity. And the role of finance, as we were just hearing it from Svetlana, is all about creating those insights and foresight, which helps the organization to maximize on a possible opportunity coming in and to minimize the risk coming in. So what action needs to be done today to probably avoid that crisis or to maximize that opportunity is where the value creation from finance comes in. But coming to the point of crisis management, When we talk about the framework, I'll pick up on three themes. And probably it can be mindset as well, which I'm sure most of you in the room can resonate with that. The first one is liquidity first. When crisis struck, cash is anyway king, but cash become of utmost importance to the organization when there is crisis. And that's where, as CFO, we are the front runner, we are the torchbearer to give a clear indication to the organization that how cash flow position is. And this is one of the important phenomena that during crisis, how do you manage your working capital? How do you minimize your DSOs, your inventory turnovers or inventory days, or you maximize your DPO to manage the overall cash cycle? One thing correlating to this, I would say, is it's a phenomena where when you respond to a crisis, one, you manage cash. Second one, it's a natural reaction to cut cost, and which is one of probably the most obvious reaction which comes across. But as CFOs, it is our responsibility to see that are we cutting cost, which is fat in the organization, or are we cutting bone, where we are depleting the capital, which is what we were discussing just a few minutes back. Now, the second thing which I would say is a mindset or a framework of reallocate. Whether it is capital, whether it is cash, whether it's resources, everything is limited. It's scarce. The fact of the matter which remains is that how can we have that approach where as CFO, we drive that mindset as well as take actions to reallocate resources from low margin to high margin, low growth to high growth business. And that's where we create long-term value creation for the various stakeholders while preserving what we have today. And third, and perhaps the last thing which I would say on the framework part is, at the end of the day, during crisis, when CFO has to lead, cash optimization or cash generation, CFO has to lead, these strategic calls, act as a co-pilot to CEO and the board in advising all that stuff. Important element is to have that communication as well. A transparent communication stating the way we are as an organization and what are the actions which we are doing to kind of like prevent that to get further bad, or also what are the actions being taken to bring situation back. So all in all, I think it's a very important element which CFOs plays during crisis to preserve short-term and the long-term need of the organization, either through liquidity management, cash management, cutting cost, but reallocating resources. I think all this stuff, I'll conclude my thought with the fact that, preserving capital during crisis or cutting cost is not about being anti-growth. It's about making sure that for today, we are doing enough action that organization can sustain, survive, while we are preserving the long-term value and the strategic growth which organization expects for future.
Very well said. You have answered almost all the questions which were there on the list. No, so the key takeaway is that, no, that's a very valid point that it's not about the cost cutting or the cost reduction. It's about cost reduction without losing the competitiveness. So that's very important that the fat should go away, but the bone should not get impacted. Very well articulated. And then on the role of CFO is also evolving, as you said, that from protecting the value to liberating the value and then to creating the value, and more importantly, communicating the value. So these are some of the key takeaways from this thing. And the liquidity is also very important because unless the short term is viable, long term cannot be viable. So very well said. So moving on to the next theme, which is about the decision making. So what truly shapes decision making over a period of time is the data. Data is the foundation for any decision making, but the data without context doesn't make sense. So data can only tell you what, but Why is something that the distance between what and why needs to be bridged either through experience or through intuition. And then more importantly, what next? What's the action which is required to be taken out of that? So in today's uncertain decision making, uncertain scenario, decision making is becoming very difficult, especially when the assumptions are not sacrosanct. So my question is to you, Siddharth. This is your experience, how finance leaders can drive data-backed decisions quickly when the market conditions are uncertain and the assumptions are breaking down.
Thank you. Thank you for the question. And thanks for getting me here. So very quickly, I think I'll just want to touch upon 2 points which Anil and Svetlana picked up. So apart from being the chief crisis officer, chief cash officer, chief financial officer, I think it's also the chief data officer. And with that also, I think, I'm not sure how many of you have heard the term OVOT, which is one version of truth. And typically in organizations, when you get into and you are sitting in review meetings and you hear different set of data being presented out, and different teams have different versions of that truth or that data per se. It's important that, CFOs bring their own understanding, their skills to ensure that the organization is talking one set of, let's say, numbers, A, so that the effective decision making can happen. That's one part of it. Second, I think I just want to pick on something which Svetlana picked up, which is pilot and co-pilot. Now, someone can also end up saying, what does really a co-pilot do? Is he just there as a backup in case the pilot fails? Or is he really acting value or adding value to the organization or to the way the function is? Now, effectively, the whole role of the co-pilot is to nudge the pilot, who's in turn the CEO, to ensure that he picks up the right kind of decisions. Most of us would have worked for really, really aggressive CEOs who come from typical sales and marketing backgrounds, where optimism is the key. I will do this and I will get this growth. I will do this and this growth is going to come in. It's kind of really sitting on the table. But effectively, it's the CFOs who really come in and use either past experiences, past data sets, and their own understanding of the way the business is to ensure that whatever decisions are being picked up is picked up in turn what is effectively right for the organization. And it's not just about the information or the data, but it's about how that gets used by the CFO in terms of nudging and molding the organization in the right direction. A couple of things I just wanted to touch upon, various different facts, part of my journey. So effectively, I was in Airtel for some time. There, at one point of time, I'm sure you would have heard, we had launched something like an ISD packs, an STD packs. Now, these were again very, very focused towards individuals who were calling long distance. How did that come into play? Data mining. I'm not going to use the word AI. AI was not there at that point, but effectively used to understand this person calls up between 9 to 11, 40 minutes a day, or whatever. And then you say, okay, if I was to give him this kind of a pack, it becomes far more useful. Even today, I'm sure a lot of us realizes or do not realize, but the online advertising that's happening, that's all very targeted. Previous session, I heard Hemant talking about the AI and the fact that, the device is listening. Effectively, the ads get designed or kind of gets played to you based on what your interest area is. So that's all about data. Again, how do you use the data is all available. There's a lot of tech involved. There's a lot of science involved around it. But it's also how the CFOs or even, let's say, the decision makers in the organizations are able to bring it up to the forum to get it used far more effectively. And I think that's really the role what the CFO really plays, where he is able to nudge the organization in that direction to ensure effective decision makings can happen.
No, very well said. The data is important, data is there, but one has to go beyond the data because data is not going to give you what the customer signals are, what the market signals are, what the cultural signals are. So one has to go beyond the data to really interpret and draw a meaningful essence from the data. Yeah. Okay. So now it's a common question to all of you. So that's basically the long-term versus short-term. If we look at the business, the building brands is a decade-long process. Setting up a factory is a decade-long process, and the whatever we do in the business, it has a long-term conviction. But at the same time, as a CFO, we have to deliver results on a quarterly basis. And then each quarter we have our performance is tested. So would like to know your views on this, that how do you finance leader balance short-term survival with long-term value creation during disruptions?
2 minutes per person, right?
Yeah, 2 minutes per person.
Okay. Look, in a moment of crisis and even in the normal operation, so important to focus on core. And particularly in the period of crisis, to protect the core, protect the continuity of the operation. As you rightly said, the cash flow, cash is a king. So definitely in the moment of crisis, continuity of operation and preserve the cash. Balance between the long term and short term, it's very difficult question to answer. It's very particular to the particular period in the organization and the particular crisis, but there is no either or. We're end company, so we have to ensure that we have continuity today and balance the going forward. And sometimes between the short term to long term, you need to explain, especially if you're a listed organization, you need to explain to the board, you need to explain to the investors that in the short term, you compromise certain parameters, but you do it for the better future and for the long-term investments and security. Transparency in this case is very important to ensure that all the data speaks for you. All the facts you put on the table in the boardroom, and then you provide enough transparency to the board and enough transparency to investors on what and why you are doing and what period you are going to compromise certain parameters. This is
Oh, absolutely. Still, CFOs have to struggle a lot between making decision that whether to invest in marketing or R&D. Similarly, whether to give dividend or to make an investment or to allocate funds to CapEx. So your views, Anil, on this?
Yeah, no, I think beside what I mentioned earlier, and also what Swetana mentioned, I'll add to that only. One point which is there is the definition of short-term and long-term during crisis change. Because it's not, it's in a war zone, your things are not defined by a normal standard, it changes. And accordingly, the response and accordingly, what means it, what does it mean for short-term and long-term changes as well? One thing which I personally feel, and having spent a couple of decades in the industry, is the scenario planning is where the key lies for managing short-term and long-term. Because, as finance, as CFOs, we have an ability to see things very comprehensively. We know how to connect the dots and how some of the implications are going to come in. Obviously, it's a dynamic model, but how do you put those data or information into numbers, calculate the scenarios, best case, worst case, keep evolving on that, and accordingly, organization taking response towards those scenarios, I think is a great tool to look into how things can be managed from a short-term perspective, which is all about sustaining, which is all about surviving, and from a long-term perspective, which is all about protecting the growth which is required for the organization. So I think I'll add to what's being said so far. Scenario planning is going to be an important tool, which we use it very often. How AI, I think just correlating to the fact which the earlier panelists were talking about, how AI is going to enable us, I think that's enabling today. But as the time comes, that's going to be a further addition towards that stuff. So yeah, that's what we're done.
Well said. Yeah, Siddharth.
Right. So I think very, very simply put, when we, or rather, let me talk about myself first. When I walk into a board meeting at the end of a quarter, it's not just about the quarter results that I'm really talking about, but prior to that, I've already worked out what the next quarter or the next year is going to be. And I'll not say the full year, but at least how the full year for the current fiscal is happening. So it just kind of gets into a short term versus, let's say, medium term. But the fact is, the CFO is not really thinking of today. Very, very easy for at times to build up or to buy sales. So when you look at the organizations, it's so easy. But then when you start thinking that today's sale, what happens in 3 months' time after the fiscal, what has happened? Very classic example, one of the companies which got listed very recently. I'm not going to use the name, but they had built up extremely high stocks into the general trade, and they ended up picking up about 100 crores worth of stock back from the market. What did they do? To ensure that the valuations at the IPO stage was probably at a high, they ended up doing a short-term activity, but with a long-term detrimental stuff from their perspective. But then most of the times I've seen CFOs being that watchgate to ensure that these kind of activities do not happen. They are thinking long-term. They try to look at systems, policies, processes to ensure long-term wealth creation is there, and not just about today. It's more about how do you build for tomorrow than for today. I think with the time's up, leave it.
No, very well said. The long term is nothing, just a series of short term. That's one key takeaway. And for the short term, it is important to preserve cash, the liquidity. At the same time, keeping some reserve for the future, for the long term perspective. So these are some of the key takeaways. And the screen is showing time up for last 6 minutes. So we have exceeded our time. Sorry for that. Yeah. Any questions, anything we will be happy to take, or we can. Crystal clear. Yeah. Everyone wants to. Okay, thank you. Thanks everyone for the kind attention.
Thank you. Thank you so much. And thank you, Ashutoshi, for moderating that. Thank you. Thank you so much. चलिए आगे बढ़ते हुए next one, it's on the new capital agenda, ESG reporting, investor trust and value creation. To share the views on the same, let's please welcome our panelists. The first, Mayank Kholani, CFO, Indian Synthetic Rubber Private Limited, a joint venture of Indian Oil and TSRC Taiwan. Joining him is Swati Chauhan, Deputy CFO, Anil Agarwal Foundation Vedanta Limited. Joining them is Ashish Agrawal, Director, Resurgent India Limited. And this one will be chaired by Preeti Chadha, CFO, K. Raheja Corporate Investment Managers Private Limited. So Priya, can you bring a panelist, please, outside discussing? Please. Let's welcome everybody with your applause. Thank you.
Good evening, everyone. And I know it's very difficult to keep all of you focused at this time in the evening, but I hope for the next 20 minutes, you all are with us. So we have a very interesting topic, and it's good to have our specialist panelists who are going to answer some of the questions, some tricky ones also. We are going to put them on spot. So let me just start with one matter which may sound a little contentious. So while, and any of the panelists, please feel free to answer. So while the world has been talking so much of ESG, after the US Trump administration coming in, the focus on ESG clearly seems to be waning off. They believe focusing on ESG is actually taking away freedom and growth, while the proponents of ESG feel that not focusing on ESG is affecting the long-term environmental risk. So what are your thoughts on that when the whole world, all this years was propagating ESG? Now suddenly you have the largest economy of the world saying that defocus on ESG. Any thoughts on that? Any other?
Hi, good evening, everyone. I think, in my view, the issue is of excess. And like in Hindi, you have a term ati sarvatra varjayet. So if you do excess of anything, that becomes a problem. And but this is what is general tendency with all of us. Anything comes up, then you go overboard on it, and that creates opposition to it also. You have to do ESG, and even in Indian cultural thing also, if you see, we have been recycling, we have been doing a lot of things. We don't throw away anything just like that. But then what happens? Anything becomes fashionable, so everybody starts talking of it. But more than the reporting or talking about it or just showing it as a performance indicator, we have to inculcate these habits or these processes in our day-to-day life, in our day-to-day processes. That's going to serve the long-term purpose. Otherwise, today it is ESG, tomorrow it could be something else. But the ESG, in a sense, it's good because it will help us record and put in order a lot of things which we are normally not tracking, because we consider them as given. We consider these things as a destiny or a fate or by default, but have not been measuring. What good thing is happening with this ESG disclosures is you are measuring it, you are putting everything in a proper fashion, which is going to help organizations in the long run. Because otherwise, I've seen even in my organization or even the previous one where we worked, you have been doing a lot of things, but you have not been measuring it. You have not been putting it in a proper fashion, in a reportable manner. And initially, you find it difficult also because people don't understand the concept. You don't understand what is the concept and how to do it. So I think it's overall it's going to be better, but yeah, we have to stay away from excesses. And that's my view.
Right. Anything from you, Ashish or Swati?
So good evening. I think you already covered ESG concept actually, but you see, we are, I think, at this stage where you have seen the extreme weather, cyclone. There are many things are there which we have seen first time actually. So reporting is one part actually, but as a human being, it is important for all of us to focus on the environment side. That is one area, and governance is another area, because we are practicing ESG in many ways. So we have seen that without this ESG, I think a lot of investors are there, your stakeholders are there, your vendors are there, your customers are there. I think they are pushing hard to you to come into ESG actually, because it is their requirement. So you have to follow that actually. So like just for one example, IKEA is the world largest organization in the furniture business. Actually, they have announced that by 2028, they will not take any single product from any of the vendor who will not be compliant by ESG actually. So you see that although you are a MSME in India and you are not compliant by ESG, but you are forced to follow that guidelines or that requirement. Otherwise, you will be out from the market actually. So as a human being, we are required to see the future and the legacy for our children. And as a corporate, in a corporate world, we have to see that what is the survival for us.
Swati, any quick thoughts on the divergent views?
I think
What
they've
is-
mostly covered everything, but just to summarize it, see, political narratives are very short term, and ESG is a very long term commitment. Also, the capital markets would be valuing organizations on the way they move the needle on the ESG front. And since we are here among the finance fraternity, ESG definitely has a financial implication for the business, and it's good for business continuity. So I don't know why we should be, swayed by a short-term narrative being built by.
Absolutely. I think it's a long-term commitment from all of us. Mayank, if I can come back to you. Do you think investors today, when they are taking decisions on investments, are they making ESG as one of the key decision-making factor?
Yes, I think what is happening, there are multiple factors influencing the investor decision. So one is obviously you have regulatory requirements, because this is something which is regulatory requirement. So if you are not following the ESG path, you are on the non-compliance part. Then another is, in my view, a lot of impact is also due to the risk management. Today, if non-compliance to ESG could impact your long-term sustainability of the business itself, or even, I would say, your existence as a going concern. As Ashish said, what is happening today, it's mandatory for the top listed companies, right? Now, not for companies beyond that, even if they are very big in size in private companies, and definitely not for MSMEs or. But what is happening, since it's mandatory for the listed organizations, they in turn want, and they have their reporting requirements of the supply chain. They are asking their vendors to comply to all these things. And that's where you are stuck. And these companies have given deadlines, many of them, to your suppliers, that, okay, by this year, you have to be compliant with it, and we will not be buying your product if it's not compliant. So in that sense, it's putting you at the spot, because if you don't comply, there are other ones who are complying, and people will go, because for them, again, their customers are asking. So like for the company where I work, it's in synthetic rubber. So for us, major market is the tire manufacturers. Now, tire industries are being asked by the car manufacturers, which many of them are, say, Korean, European, these kind of companies. So they are asking, they have given a mandate to the tire manufacturers that, okay, by this year, you have to comply. Now, in turn, they are asking their vendors. So I may be a private entity. I may be not have that reporting requirement legally directly as a company, but for supply chain part, I need to report it to my customer. And they've already started asking for certain information, and that's going to increase. So that is one part. Another is, they are also looking at companies to link ESG and the financial outcomes. How is your ESG performance, and then how are your financial outcomes? Then investors are also looking at, in terms of financing, the green financing, because it has now data proves it's not something which is negative for your P&L. It's comparable, it's competitive. So there are multiple factors, and that's why investors are pushing more and more for ESG. Boards are going to push more and more, because it's not something which you can defer anymore. You have to be ready, and better sooner the better.
Absolutely, goes without saying. Ashish, before I come to you, let me go to Swati. Swati, you are part of Vedanta Foundation, which is doing so much on the ESG front. How do you actually communicate to stakeholders all that you guys are doing on the ESG front? And what is it that takes, in terms of the communication strategy from an ESG standpoint?
So see, the investors always have access to the sustainability report that the companies put out. But what finance can do more? Now, finance has a lot of touch points with the market. We talk to credit rating agencies, we are talking to the lenders, we are talking to the stock market. So one, there is a platform for finance team to talk about ESG. How do you then proactively push that communication out? I think one is you. So there are thousands of ESG metrics that the regulatory bodies want us to track. You have to identify relevant metrics that impact the financials, tie them to the cost of capital, tie them to the capex, asset life, risk to the business, and integrate them in the communication that you put out. So you have to just need it in with your, say, MD&A, in your investor presentations. So usually you would see organizations have a financial, operational performance and ESG performance. Rather than doing that, I mean, add just one slide which, links your ESG metrics to the cost of capital, how it is trending, so it gives teeth to the ESG that you are tracking actually in terms of financials. That is what I mean, track relevant metrics. To being again in finance, I mean, we have put in a lot of controls. There's a lot of assurance that the finance teams do. Extend the same to the ESG tracking and also communicate it proactively. So it will add credibility to the ESG metrics that the organization is putting out. Right. Third is you can also talk to the investor community about the governance process that's put in place in any organization. I'm sure at the board level, the capital allocation decisions, the management incentives probably, the CapEx decisions are taking into account the ESG risks. So you just need to go out and communicate how you are, including them in these decisions and how a robust governance framework has been designed around ESG, which in turn, gives returns to the organization in terms of finances. So these are the 2, 3 things that I can think of, what finance can proactively do to communicate on ESG.
Right. So Swati, it's not just about doing, but also communicating it, right? Ashish, coming to you, and I'm just taking a clue from what Swati said in terms of a framework for ESG. How does it rating for ESG? First of all, are there any ESG ratings, if at all? And if there are, then how does a rating agency even evaluate an organization based on whatever they are doing on the ESG side, and who are actually referring to these ratings, and how important are these ratings?
Great. Thank you so much. So I would like to just ask from the people who are here that are you aware about ESG rating? Anybody has done ESG rating till now for your organization? Okay, great. So as he asked about the ESG ratings, in India, this framework is already there. And like credit rating, because we all are CFOs and the finance professionals, so we are all aware that what is credit rating actually. So the same way the ESG rating concept has come, and this government has taken the initiative, and they have appointed SEBI as a regulator, and SEBI has given the license to some 19 companies till now for the ESG ratings. So ESG ratings practically in India is now live, and you see the advantage and then how the ESG rating will help you and all these things. So practically there are two kind of rating agencies are there in ESG rating also. One category 1 and category 2. So category 1 rating agency, why I'm discussing this thing, because this is a new subject. So once we are discussing, you should know that what are the benefits and how it works. So category 1, it includes the entire financial instruments and the ESG parameters you can certify or you can rate. But in category 2, only the ESG parameters you can rate actually. So these two kind of licenses are there. I'm from a from a company called Resurgent India Limited. We also have taken the ESG rating license from SEBI. We are doing the rating on the category 2. We have not taken category 1. So we are rating the ESG parameters actually. How it is done and all. So for the entire ESG rating, the framework has been given by the SEBI. So all rating agency has to follow the same framework which has been given by SEBI. Only thing is that method can be different for evaluating the process. So we have to develop a software where it will capture all the information. So suppose each company is planning to go for ESG rating. So they have to give the data which we require as per the framework, which will be the areas where they are working in the environmental side, social side, governance side actually. So all parameters we'll take. Then we will put it in the software and we'll get the rating, and we'll circulate it to the public and to them also basically. So this is the process of rating actually, although it is not compulsory in India, and rating can also be taken by the issuer in case of financial instrument or the person who is investing. So it is on both the ways actually. So suppose I'm the investor in a company, I can go to the rating agency and I can ask that each company has to rate. So I can give the mandate to the rating agency, or he can go suo moto that I am taking this much of fund from the market. I want the
ESG rating actually. So this is the requirement also. So you see that for ESG rating, so there is some cost also which the rating agency will charge. But although it is not compulsory till now in India, but hopefully very soon it will become compulsory to certain category of the corporates. But if we see till now in last 1.5 years, there are many corporates those have taken the ESG rating. And the advantage of it actually, if you see, it is a third party validation. Whatever you are doing ESG reportings and all, you are doing them yourself actually. Here, the third party rating agency is evaluating your parameters, evaluating your all framework and issuing the rating, which will help you to interact with your investors, vendor, customers, everywhere. All the stakeholders will get the advantage of it actually. In turn of it, you may get the lesser borrowing cost, you may get the larger investor also, you may get the advantage of the global contracts. So all these things are there. So you see that this is one of the instrument which everybody should try. And there is a very small cost of it actually, but you will know that where you stand in the ESG parameters actually. And it's a third party validation actually. So it's a public rating also. So it will be known to public also.
Right. So Ashish, I'm going to pick your brain offline on the ESG rating. Are there any digital platforms or automated platforms which can help warehouse this data? Because ESG is a journey. You may want to look back 10 years and see how have you progressed on the ESG side. So just tell us a little more about what platforms can we use and are there any challenges with those platforms?
So I'll talk about whether technology and digital platforms uh, can help you scale up or, help you in putting together your ESG data. Uh, so is it a yes or a no? It's a vehement yes, because if you would see the only function in an organization where people trust the quality of the data is finance, right? So we have aced this art of uh, building large scale functions, basis technology and digital platforms. Uh, but it comes with a caveat. You cannot scale a platform which, so you have to first put the ESG governance in place. You have to identify ownership, the data points have to be defined correctly. There has to be a framework that has to be designed before we, even jump into technology and start gathering that data. And so what technology can give us, it can give us data clarity, because automated data capture would reduce manual errors, it will reduce audit risk. It can give us traceability, which is a metric that is, so it will give you audit trails, right? And this is something which is increasingly the expectation by the regulators, by the lenders, and it will also give you integration possibility. So it will sit beside the data in the financials and operation systems, and you can integrate, you can take out insights, you can forecast, you can do scenario analysis. There are multiple platforms available. The organization can go ahead and build something of their own if they have the technological prowess. Uh, I feel that, it depends on the size of the organization, the kind of depth are you looking at, whether you want to go in for an in-house platform or you want to get a third-party consultant, because they also bring a subject matter expertise, which is they have worked across the industries and they are the best players to help you out.
Perfect. Since we're running short of time, I'll just ask one last question to Mayank, and Mayank, if you can quickly answer that. After all the effort that goes into doing ESG, do you think that investors or any stakeholders give any kind of premium to organizations which are really doing good job with ESG, either in terms of choosing those companies over others, or even when you're talking about green financing, do you get better cost of finance if you are very highly ESG focused?
I'll keep my answer short because we are running late. So in one word answer is absolutely yes. So yes, you are getting preferable financing. And in my view, it's much more beyond the financing part alone, because now for many businesses, it's a question of sustainability or to say business continuity. Because if your customers are asking for ESG related reports, they are asking for your performance metrics and not just one or two, the entire data. Now, if you don't do that, ultimately your customers are going to stop buying from you, because uh, if your customers are required to report all these things in their annual reports, if they happen to be listed organizations, they will not buy from you just because you are not doing what you have to do from on ESG. They will find some other source. So forget about financing or even the cheaper cost or anything else. If you won't have customers to buy your material, what will you do? Your complete business continuity is at stake. So in short, it's definitely a requirement which have to do. And in my view, it's just a matter of time. Sooner or later, it's going to come for most of the organizations, except for very, very small ones. And they are also at the risk because, as Ashish said, because if their customers happen to have this requirement in place, even they will have to do some reporting. But otherwise, it's better we get ready on our own instead of when a requirement comes, okay, from next financial year, you have to do this reporting. Then you are stuck and you will be running against the time and you won't have any other option. So better you take your time, get things in place, because different organizations would be at different stages of maturity in terms of tracking these details, in terms of maintaining a record. And capacity building is a big part which needs to be done in my view, because if you go and ask these ESG concepts to say 10 companies, the people in 10 companies, you will find 10 different answers, because many people won't even be understanding or won't even have that kind of uh, thought process to say, okay, what is the meaning of that? Like simple thing, if you ask somebody if your office is disabled friendly, almost everyone will say yes. But now, if they don't have a ramp for disabled people to get into it, but people, and I found it in even in my circle, and normally the answer is yes. But if you, when you ask this question, oh, we didn't realize it's required in ESG. So that's what it is. It's a matter of survival. Thank you.
Just to add on it, I'll take 1 minute on the finance side because this is my subject. Actually, I'm dealing on regular basis. So ESG funding is one of the very large subject. Actually, we all CFO will be redundant if we will not go for ESG funding after 5 years. Actually, government is doing a lot. International agency, because we are dealing with funds. So the funds which are in India, they are not getting funds if they are not ESG compliant or they are not having the ESG aspect in the fund investment. So one thing is that the funds will be dried up if the ESG will not be there. Other than that, the government of India, SEBI, has come out with a circular on June 5. They have made a framework for ESG bonds. So you can, as a corporate, you can raise ESG bonds in India. The first bond which has come in India, it has come in the month of June itself. L&T Limited has raised. You see the advantage of it. I'll just give with the example only. So they have raised this ESG bond, first bond in India. They have raised for 3 years. Their borrowing cost was for basically 5 years, and they have raised for 3 years actually. So you see, uh, they got 15 bips advantage in the overall borrowing cost. And there were many takers actually. So like mutual funds, insurance company, they are also bound to invest in the ESG sector actually, or ESG requirement, ESG led instruments actually. So this will be a, for all of us when we are working in a corporate, because fundraising is one of the major aspects, either debt or equity. We have to see the which are the instruments, which are the areas where we can go and we can raise money through this instrument. This will get you the funding, faster funding, and the larger funds also, and the cost of the funding will also be less.
Thank you. Thank you so much. And thank you, Preeti ji, for moderating that. Thank you, ma'am. Surely, with that, to our last discussion for today. And then, of course, what awaits us is the award ceremony. This is on Guardians of Trust, how CFOs can safeguard financial data in a digital first world. And to share their views, please join me in welcoming to the stage Rohit Nair, Chief Financial Officer of Advani Foundation. Joining Rohit is Ashish Tiwari, Group Chief Financial Officer, TCI Group, Transport Corporation of India Limited. Joining them is Hitesh K. Uppal, Chief Financial Officer, Magic Bricks. Joining them is Mandeep Mehta, Group CFO, PB Fintech, Policy Bazaar, Pesa Bazaar. Joining them is Rohit Gupta, CFO, FPMA, Head South Asia, Warner Bros. Discovery. And this one will be chaired by Gaurav Jain, CEO of AXA. And I believe they are not here. Supriya, can you help bring up panelists, please? They were together discussing something. It takes on everybody, please. Are you? Let's welcome them, please, though they're here. They won't even welcome them. Thank you.
Thank you very much. Good evening, everybody. I think we are here all to celebrate 40 under 40, BW 40 under 40. Before that, I think we are here to discuss about our topic, which is called Guardians of the Trust. The meaning of that means that how the CFOs can safeguard financial data in this digitally first world. So the idea is to bring among our experts of industry here to share the knowledge about how we act as a guardian of the trust. As of now, or maybe in past, the CFOs have been given an idea only to possess certain information on numerical side. But I believe the changing world with AI and all the fintech which is coming in now, we are acting as a different strategy, and we really want to act as a guardian of the trust. So my name is Gaurav Jain. I'm CEO of AXA France V India Insurance Branch. And in the era where financial data is primary target for sophisticated cyber threats, the role of the chief financial officers extend far beyond traditional accounting. CFOs are now critical defenders of organization trust and stability. Today, we will explore practical strategies for financial leaders to navigate this complex digital landscape. So we try to cover, I think we've given 45 minutes, so it's just 20 minutes, and we'll also running short of time. So we'll try to cover our three main focus areas. The first one is cyber risk identification and mitigation. The second one is around the culture and capabilities building in finance team. And the third one is around regulation, partnership, and best practice. So I think without wasting our time, I think I really want to jump up with our first focus area, which is related to the cyber risk identification and the mitigation. I really like to ask my panelists if they can introduce very quickly themselves so that, we can understand who are coming from which industry and help others to understand your process.
Hi everyone, my name is Rohit. I head finance at Warner Brothers Discovery and have been in media industry now for almost more than 5 years.
Good evening. I'm Mandeep. I'm Group CFO for Policy Bazaar, Paisa Bazaar, and we have some Dubai operation. Our mission is Her Family Hogi in short, and we are trying to do what we can do in our little own ways to increase the penetration of insurance in India.
Good evening, all. Heartiest congratulations to all winners. I'm Hitesh Uppal, CFO at Magic Bricks.
Yeah, good evening. Thanks to BW team for having us here, and thanks to all of you. I'm Rohit Nayyar. I'm the CFO at Wadhwani Foundation. Thank you.
So we have people from different industries here to really talk about the cyber threat risk, the data which is running around today. So let's start our discussion. Our first focus area is cyber risk identification and mitigation. Let's dive into our first segment. In today's landscape, a CFO needs a clear line of sight into potential vulnerabilities. Understanding the true financial exposure in the cultural first step in defense, but translating technical threats into quantifiable financial items is a persistent challenge. So Mandeep, I want to ask the first question to you. The traditional risk assessment often use qualitative metrics like high, medium, low. How can CFO move beyond those metrics and truly quantify and prioritize the specific financial risk associated with potential cyber attacks and data breaches? I think you are into insurance industry. I think understand that well, and I want to ask this question to you.
Before I answer this question from insurance industry perspective, which too big a task, risk is always qualitative, right? And the quantification is subjective or rather judgment, more of judgment. But yet people like us, like you, who likes number or rather try to see things in black and white, will force some kind of framework to say, what is the number I'm looking at, right? Having said that, nowadays risk quantification is not that difficult and it has definitely moved beyond high, medium, low kind of framework. There are engines or the website right now where you put your company profile and your website, etc., and it will give you the dollar value of risk, right? And this is pretty prevalent in Europe and US. India mein itna nahi hai, but there you can actually get a dollar value of risk. Now the problem is the moment you get a dollar value of risk, what decision does it drive? Sometime it will ask you to focus on some higher value risk, whereas the attack may come from something else, right? So there's a pros and cons of focusing on the dollar value or a quantification. Rather, I will say two suggestions. The way to look at it is look at your domain maturity models, right? Which means how strong your processes are they documented, are they followed, not followed, and how frequently they are reviewed, etc., which basically give you sense in terms of where you are in terms of your risk mitigation strategy. And second, now you ask from insurance industry perspective, the perspective is buy insurance, cyber insurance, right? Risk is very difficult to quantify and identify, specifically in an era of AI. So the better is, seriously, now jokes aside, some kind of risk mitigation also come from taking a protection where the expert asks you question, the underwriter look at your organization and say that this is the kind of cover you need. It could be 50 crores, it could be 500 crores, it could be 1,000 crores. Now, based on that, you can decide how much you can afford or how much you want to cover. At least that part is there. If you don't have your in-house expertise to quantify the risk in numbers, then this is one of the technique available to you. But what you can always do is like nature of industry. If you deal in personal data of individuals, if you deal in financial transaction, then your risk is obviously high. Any kind of number could be a prophecy kind of thing that you want to justify to yourself. But gut feeling, judgment, there's no replacement of that actually.
Thanks, Mandeep. I think really put the framework around it, how where you can really do the quantification of the risk. With my experience also, I want to share something about it. I think uh, if you really get into understanding the risk correctly, you can really identify certain financial risks. As you all know, DPDP Act is on the way, and there is a penalty around it. So if there is earlier in India, what you say, maximum penalty 5 lakh rupees, yaar, kuch nahi hota. But now everybody understand what is kind of a risk is there if some data leakage happened on personal information side or anything. So probably, as Mandeep has just suggested, the insurance companies are still averting. I'm being CEO and attending one of, with the chairman of IIDI meeting. He was asking all the CEOs to bring up with a product which is really to cover up the cyber risk in terms of DPDC Act, DPDD Act, but unfortunately, we're still not there to cover it. As globally, we know there are GDPR, there are a lot of things which is there, but in India, we are still not there. We have to really quantify the risk in terms of numbers. Even if it is a single small data leakage, there'll be a penalty, there'll be a cost to it, and we have to identify. Similarly, for example, in EXA, we used to do, for example, what is the risk of not doing some, assignment or some kind of a responsibility given in a contract, you may lose the contract. And that loss of profit is also a risk. So you can quantify things with a different ways and means. So we have to really understand and go deep into it, and then can probably do it.
I think as far as the records and transactions are concerned, it's not only the penalty, it's like your customer data. So there's an annual report of loss of record report. It's an annual report which basically says what a loss of one record of a particular type of industry and company can mean. And then this service is available where you can say that this many personal records I deal with, and they give you a quantification. But this is only a quantification side. See, we have not seen, at least in India, a scenario where a massive breach happened and the business has gone down. Breaches has happened, but yet, as of now, India has a very unique way of coming back and being.
But it happened in globally. So globally, we know it happens. The companies can go down if something really happened big. So I think the things are coming up. India is also grooming towards that. So we have to be ready for that as in finance leaders. So there's the next question comes for you. What do you think? What practical framework should finance leaders adopt to proactively mitigate cyber risk within their operations rather than just reacting to the incident after they have occurred? So what should we do proactively?
Agree with Mandeep, we can't go with the previous distribution of high risk, low, medium. Definitely this need to be quantified. But what I believe the organization need to focus on a theory called crown jewel, means you need to protect what's important for you. So there are 3 layers in the organization. One is your the main layer, which from where payments are happening, protect that one, because that's is your cost going out if somebody tap that. Second layer is the data you are protecting. So means you are collecting. Even DPDP Act clearly says that the data what you are collecting is not an asset, it's a liability. In case it gets out, then you would be severely punished. And DPDP contains there are 2 important factors. One is the penalty, which goes up to 250 crores, and then there is an officer in default. Yes. If CISO say to CFO that we are breach and we need some amount of money to protect that, and CFO say no, then the CFO would be personally liable for such default, not the CISO. So CFO need to ensure everything in the organization go hand in hand with CISO. And the third, there is your systems working in, like your ERP system. So from an operation point of view, if you protect these 3 there and keep other thing in aside, I think that would be the good one.
I think you are from more in terms of a company which is into internet business. So probably this has always been a big risk for you. So
Correct.
if we can understand practically, in your business, how you're doing it, I think that will give a better understanding of this question.
So one, definitely, even before the DPTP came, there's a draft paper being circulated by the government. So we started, I think, this activity 1.5 years back. We get certain agencies who are expert in this. E&Y, Deloitte, they are working with us on framework of the DPTP compliance and getting the full charter ready. We are not there, but definitely we are working on that.
Thank you. Thanks, Desh. I think we have understood that, how exactly and how deeply it can impact to a business in terms of if something happened. So I think we have to be prepared before it happens in our business, and that is what is important for the business. Let's go to the second leg of our focus area, where we're talking about, developing the culture among the employees, because I think the employees are the first guardian of it. The colleagues are more important. So I think the question is for you, Rohit. Uh, the finance function often handles the most sensitive data, payroll, M&A details, banking information. What specific decisive roles should CFOs play in embedding a mandatory culture of cyber resilience within their finance team? So that is something which we have to brought in the mindset of the people before it really falls into the company.
Yeah, thanks, Gaurav. That's a great question. Especially in these times when there is rising integration between tech and finance. CFO cannot stay away from tech. So that's a non-negotiable thing. So it's critical, the role of embedding cyber resilience in the processes and data is strategic, foundational, and decisive. It goes well beyond just approving the IT budget for security. The CFO must act as the culture owner and risk steward for the financial data. So accordingly, the teams also be well trained, well informed, and the focus should be also on the security of the data. I think we as CFOs have been always worried about the accuracy of the data, but it's very important that the data is secured. So it's important that in all the finance processes, there are documented cyber controls, segregation of duties, and tested recovery playbooks are in place. So that when some incident happens, and we all know we are all vulnerable to such incidents, finance team is also able to understand and evaluate and figure out the fraudulent transactions or the data manipulation done in across entities, across entries basically, and then able to create the necessary documentation, because I think nobody other than the finance team members can really come up with the proper documentation which may be required for your claims and other regulatory filings. So it's very important for the CFO and CISO to work together so that the team is also getting role-based cyber training, and they are very much aware of all the different types of phishing attacks and all. Yeah, sure.
Just want to add on this. So the hackers are now more intelligent than what the team is doing. I think you can go and see one case study on Roop company, which is the Hong Kong based. In that case, the employee get a message from WhatsApp message. You must be getting from your CFO CEOs. I need some money transfer. What this guy has done, he said, boss, you please come on the video call and give me the instruction and bring along with 2 more board members. On the call, there are 5 people attended. One of them is this guy, rest 4 are deep fakes. So we need to understand where the technology is going. Deep fake you can make from Hagen. There are multiple softwares within 5 minutes. You can clone your voice with only 10-second voice sample with 11 labs. So I think we as a CFO or CSO, we need to see where the technology is going, and employees need to take that pace also.
So thankfully,
क्या करना चाहिए ऐसे में?
So actually, we have a use case where one of my team member got an instruction from US that I am not able to reach Rohit. Can you buy some Amazon vouchers for the customer? Fortunately, because of something it struck in his mind about the trainings we keep doing, and he caught this that Rohit is not even copied in that email, and how come an occasional mail comes directly to him?
नहीं वो तो ठीक है, but
WhatsApp message came from CEO Hitesh, I need this. Now, today I got a chain mail where this guy is interacting with CEO. CEO said, I am connecting you with CFO. Please connect with him.
That's next level.
It's a next level. So, okay. So in that case, you need to go for your physical meeting. No other choice.
I think what
board word decide कर लो CEO के साथ.
Yeah, maybe, yeah.
पहली बार हम कहाँ
I
मिले
can
थे?
say even for family members, right? Nowadays, even I think.
I think we understood that, the learning, awareness among our employees and people are more important, because the most sophisticated technical defense can be rendered useless by clicking a single phishing email. That's as simple as that. If we are not aware of it, it can happen with anybody. I think that's right. Let's move into our next question with Rohit for you. In situation involving highly sensitive data, time-bound data like M&A deals or upcoming earning reports, what specialized protocols or culture of secrecy must be finance leaders establish to prevent data leak, both accidentally or intentionally within your organization?
Yeah, I think I totally agree with whatever has been said. But just to add on to a couple of points on the psychology and on the people side, I've seen that I have dealt with a lot of mergers and acquisition in my short career, and I have seen that leaks always, doesn't happen always because of bad intentions. It sometimes happen out of excitement or your colleague calling out you, and then out of that pressure you share that information which you should not, or maybe out of urge to feel more relevant or more important. I think these are factors which are around the human psychology, which propels one to share more information than he should have. So from that perspective, I think we should have that culture where we teach or we tell our team members of the importance and the responsibility which they have to do. And it's not just the power, it's a responsibility which they sort of show. And second aspect, on the people side, I would say that usually whenever someone says that I cannot discuss this part with you, there is a sort of a judgment around it. So I think we should encourage these statements where we respect the other person's responsibility or the boundary around it. And we promote some such kind of a statements where they feel sort of confident in saying that this is sensitive and I cannot discuss with you, especially on the junior team members who deals with a lot of sensitive data. I have seen that cross-functional team members, reaching out to junior teams and junior team members and asking for some sort of a data around maybe payroll, इसको कितनी salary मिलती है, let's say, or maybe around I know there has been a conversation around mergers acquisition. Can you tell what's going around that? So we have to teach teach that aspect too, especially on the junior team members, and maybe discussing openly about the consequences of sharing over sensitive information, like personal consequences, regulatory consequences, as you have discussed, or maybe around overall accountability to it. So I think these are the cases where we can do better in protecting the sensitive information. I will just end with a short example, a short incident which happened in my previous organization. So there was quarterly results to be announced a day after, and junior team members were taking out printout of the investor presentation, and some team members left important slides over that common office printer. Next day, I came and saw that those slides were still lying at that common office printer. And I asked team members, do you know who have access to this printer? It's legal, HR, operations, admin, every function who is there on that floor have access to that information. So it's not always through hacking that we sort of leak these information. It's also because of that carelessness where we can do better. So it's about discussing more openly and training them about the importance of the information which they have. I think at that.
I think ये चैट जीपीटी तो फाइनेंस वालों को बंद कर देना चाहिए. तो हमारी मतलब every organization says कि यार AI यूज करना है, कॉस्ट सेव करनी है, and they go on a campaign to say कि यार सब करो, कोडिंग वाले भी करेंगे, HR वाले भी करेंगे. But ठीक है, this is a public platform, chat GPT. So yeah, what I noticed is that somebody is uploading financial results and saying अच्छा इसका analysis करके summary बना दो यार. So I said boss ये तो listed company में हो नहीं सकता. So we made a request saying कि WhatsApp बंद करो and chat GPT बंद करो.
Yeah, I think I totally agree. Along with chat GPT, I think WhatsApp is also becoming a very common platform where we are exchanging information around the numbers data, which is still to be, I think we can tighten around the protocols around it.
Yeah, but very important point, if I may take 1 minute, and I want to ask, how many of your finance department design, the physical layout is closed in the sense, ये accounting वाले या financial reporting वालों का section एकदम closed है, glass है, brick है, और कितने IR वाले ऐसे हैं जो एकदम कोने में बैठते हैं, नहीं है ना? So this is one consideration which we are fighting or rather thinking about right now, because for listed company, UPSI is important. And a growth, high growth company, you will be always working on 4-5 project, which can be a big project. So we are actually thinking क्या करें? दिल से चाहते हैं कि this should be open, but at the same time, अगर किसी ने प्रिंटर पे छोड़ दिया तो प्रॉब्ली एजुकेशन ठीक है, लेकिन उनका प्रिंटर सेपरेट होना चाहिए, नहीं
I totally agree,
होना
sir.
चाहिए. The separate का मतलब ये है that you have to have a wall, and this goes against the grain of teamwork. So that's the dilemma that we have to
I
handle.
agree with you, Mandeep. I think, but more importantly, you can't create walls in nowadays
I will
culture.
share
I
this
think
wall.
what important is that, the learning and awareness. I think we in AXA also do a lot of campaigns in terms of making aware. And it's a regular mandatory trainings which is happening and very simple things. For example, there is an email coming to me as an CEO saying that you have to answer these 4 questions, whether you will share your results to somebody else. I said, I will never share it, but they keep doing it. I think more regularly, if we do it now, probably it will go somewhere in back of my mind and I will not do it again, even by mistake. That's how it
A
works.
simple example, payroll team. If you have a payroll team in-house and it's not outsourced, will it have a separate section or not?
It will. It will have it.
And I think in some organizations, to your point, sir, there is this wall and curtain, which is there when you are having any confidential meeting. So you put it then curtain so that nobody outside that room can see the data which you are presenting, especially in the Tatas and Uber I've seen from the people what I've learned, there is that wall already there in some.
Yeah. So I think moving to the next section, which is about regulations, partnerships, and best practices. I think very quickly we will want to cover because time is already up. With you, Mandeep, first. I think with regulations around data security involving, which we know is a new act is coming up so rapidly globally, how can CFO stay ahead of the curve while ensuring that compliance doesn't hinder agility and speed that modern business demands? So I think the question revolves around the same thing. If we create walls, whether it will really work as an agile environment as well. So very quickly.
If you're a high growth company at a scale, you have to be agile by design. Agile by design means the first time when you design it, you design thinking future regulation, or rather you do anonymization of data right at the first point of touch point, so that any regulation which can come, or most of the regulation that you can handle with minimal disruption and work. That's the only way. See, if you are in a high growth, new tech kind of a business, either you are on edge of technology or on the edge of regulation. That's where you find the niche, right? The gap where you can do something innovative. That's a definition of innovation, right? So which means that regulation will evolve after you have done your business or design your processes. So very important to design it in a manner that this is agile in terms of managing some kind of regulation. That's the only way. In our industry, where personal data is very, very important. Yeah. So you have to take care of the data first and then anything else. And once you do that, these regulations are just a minor modification, tweaks here and there, which will take care of things. Yeah.
I think it's absolutely right. We are in the reinsurance industry. And one of the regulations says that you can't save your data outside India. And most of the clouds are having, servers outside India. So we have to find a balance around it. It's just not by design. I think we have to find a right solution, even in the regulations as well, so that, people can really use it. Otherwise, it will become very redundant for us. So I think very quickly, last question for you, Hitesh. I think, what are the best practices for fostering effective CFO, CISO collaboration to safeguard financial data without duplicating efforts or inadvertently creating new organizational silos? I think that is again quite similar to what we have already discussed, but I think very quickly.
So for me, CFO and CISO are the power couple of the organization. Okay, so they control most of the power decisions in the organization. What we have in our organization is kind of a RACI matrix where there is a responsible, accountable person. Generally, responsible is the incident happens is a CISO. Accountable will be finance team member, CFO. Then we have C is a consultant with generally the legal counsel happening, and informed is the board part. So that's how the decision making and responsibility are segregated. But important thing is the shared language is money. When we talk about any incidents happening, what is the impact? If CISO is saying that this incident will happen, then what will be the outcome? So that whether we need to provide for in the books or do something else. And then there are shared KPIs between two of us, and also the budgets are the real budgets. Sometimes what will happen, the people keep on doing say 10% from the last year. We do zero-based budgeting. which keep on saying, okay, this is the new incident or this is the new threat coming in. Let's do from a ground up. So that's
I think absolutely right. I think shared KPIs, clear reporting lines, I think these can be used to really create a partnership. I think that's all about our session. The key takeaways for me is the center on moving from reactive defense to proactive quantification of risk, fostering a mandatory culture of awareness among employees, and strengthening the vital partnership between the CFO and the C. So I think that is what it is. I want to thank my all panelists, Rohit, Hitesh, Pandeep, and Rohit. I think thank you all for giving that information and sharing that knowledge with us. That's all about it. Thank you. If you have any questions, please, you don't find these kind of a panelists again, you should ask, question if you have anything. Yeah, somebody's there. Can you just throw the mics there? Yeah, one. We'll take one question.
Frankly, I mean, there was a considerable period of time when we didn't know who we are in the sense that are we a broker, are we an aggregator, are we a telecaller? There was a considerable period of time, but I think our basic philosophy was doing things in-house. We use cloud pretty later. So we had more control over data. There are many phases of this life and many steps that we have taken, but generally, philosophically, we own the data, we kept it with ourselves. Who? Sorry? Yes. No, they are very, actually, they are very conscious in terms of what use this data is being made of. And surprisingly, and the youngster who work with us as well, surprisingly, they're quotient about social issues, ethical, privacy is way too high than our generation.
Thanks, Mandeep. One more question. Just one more very quickly, please.
Like in 1990, you're saying the same question, asking the same question. If somebody asks in 1990, will the internet will be, if any future for the internet? So we know the answer. Okay. I don't think the technology, the way it's going, we can control that, but definitely we need to create a wall or to protect ourselves or keep ourselves updated how the things are moving in. I can say India is still far behind what's happening in other parts of the world. They are way ahead. We need to catch up. But to answer your question, the answer is no. We need to be more cautious on our data and that's why the government is also putting the hefty penalty. Earlier it's 5 lakh, now it's 200 to 50 crores. So I think everybody is cautious about taking a call. This is a medium risk type or the low risk type, which is not relevant now.
No, I think the question is again back to you. वो जो इंस्टेंस था जिसमें 5 लोग आए वीडियो कॉल पे, उसका डिजिटल सॉल्यूशन है या गोइंग बैक टू द सिस्टम? लाइक बताओ, अपना नाम बताओ, पहले हम कहाँ मिले थे, या फिर बेस्ट मेरी रेटिंग क्या थी लास्ट, और जब तक वो A+ ना बोले तब तक पेमेंट नहीं करनी.
That's a good one. In that incident, $25 million was actually siphoned out of the company. There's a Arup, the company, 2024 incident. But yes, I can understand. No, it's a 20. No, that's a code word. So we can, so generally when we share the data with consultant, we have part code. So one half password is coming from some other person. So we can have some kind of this encryption.
But जब 5 लोगों को deep fake कर दिया तो पता नहीं क्या होगा. But I think what is going to happen is the more control of data, digital will be there, more data will get digital, but more control in hand of the user, where you will have consent architecture playing out, saying where you give the consent and when do you revoke it and what is happening to the data. The data trail will happen. Another thing will happen is a blockchain based data usage. So that's how the digitization will push.
The quantum computing is working, and I think we are just few years away where they will break the blockchain also. That's latest I read.
So this explains the topic is very close to the hearts of the CFOs. So we've seen it, kind of an interaction happen, and thanks to both of you. And thanks to all of the panelists here. I think the crux is that we have to start from ourselves. We have to be aware ourselves. We know, how we can really safeguard ourselves first. Then we have to talk about company. Then we have to talk about our colleagues. I think it's more of awareness. That's the only safeguard we have. De-digitalization is not going to happen at all because the kind of a quantum of data we are already running with, it's not possible. But what can happen is really the awareness, learning, and to really use it in a right way. Thank you.
Thank you. Thank you so much. Thank you, Gaurav, for moderating that. A picture, please. Thank you. Thank you so much. Thank you. Akash, can you have the stage cleared? While they do so, moving ahead to the discussions of the day, to the celebrations of the evening, I welcome you to the 4th edition of BW Finance 40 Under 40 Awards 2025. All of us will celebrate and honor the trailblazers like yourselves in the space of finance, who've been demonstrating exceptional commitment and dedication towards championing the finance strategy in India. A big thank you to our partners once again, our fundraising partner, Resurgent, our event partner, the Thick Shake Factory, Joy Travels Private Limited, Opal Events, Reality Plus, Exchange for Media, IWM Buzz, Impact, Pitch, Fandrum, and also Beanley Coffee. Just to let you know, the awards ceremony is being streamed live across all BW Business World platforms, including their social media channels and also on www.bwcfoworld.com. Any picture that you take and post online, any view and your opinion that you share online, please also use the hashtag BWFinance40 Under 40, where 40 is numeric. For all the winners, once you receive your award and step down from the stage, please proceed to stage left, and that's audience right, for an individual picture. And also please stay back for a group picture in the end, both for editorial purposes. We'll make sure that snacks are served so that no one's has to go move outside. That will take care of for you. Yes? And before we reveal the winners of the 4th edition of the Finance 40 Under 40 Awards, happy announcement, we're also doing the 9th edition of BW CFO World's Best CFO and Finance Strategy Excellence Awards 2025 happening in Mumbai. That's the preset of the same. You can nominate, register, meet the team, meet Akash for the same. He'll help you with that. And साथ ही में, to arrive at the winners list that I have just got in my hand, the entire nomination process, उसमें क्या हुआ था, jury members के साथ आपका क्या वार्तालाप हुआ था, how did we arrive at the final list, all of that is captured beautifully in an AV. I would like to first show you the jury AV as well. Just a second, एक second, let me just take this. And then we can.
It was really amazing to see the quality of talent. Congratulations to all the winners. And all I would say is that keep moving ahead and create a lasting impact on business and on society.
The future of finance is safe. It was an absolute privilege to serve on the jury for this year's Business World Finance 40 Under 40. Going through the nominations was both a challenge and a delight. A challenge because how do you choose when the caliber of talent is this high? And a delight because it is reassuring to see the depth of innovation, integrity, and vision in the next gen of finance leaders. To the winners out there, congratulations. You stood out not just for your numbers, but for the stories behind them, how you navigated complexity and drove impact. Wear this recognition as a hat and a reminder of the responsibility you now carry to shape the industry. To all the participants, margins between winning and losing has been this thin. So keep believing in yourself and keep pushing. Congratulations to all again.
I had the privilege of being on the jury for the Business World 40 by 40. First of all, I would like to congratulate the winners who have really made it so far. Congratulations on the work, really well done. But I do want to call out that the competition was intense this year. The quality of work that we had seen from finance professionals coming from multiple industries, whether they were professionals or working in a private sector, or whether it was a public sector or a technology or a manufacturing company, I think the kind of work that's really happening in the industry is amazing. And there is just so much to learn from all of us. So don't miss the opportunity as you engage with your peers to really understand what they have done. Once again, congratulations to all the winners.
I was one of the jury members for shortlisting and evaluating 40 Under 40 BW Finance Leaders Awards for 2025. The process of evaluation was enriching. Candidates were very enthusiastic, and it was a very democratic and objective process of selection by the jury members. The questions asked were objective to find out the real strength of the candidates for the awards, and the responses received are also very enthusiastic. I very much love the process and happy to be part of that. I congratulate all the winners of these awards and wish best to them. Thank you.
And I would like to congratulate BW Finance 40 Under 40 for yet another season of awarding amazing CFOs and the finance managers. I was honored to be part of this jury member team where all the industry experts were there with me on the dais. And now we are very excited to really evaluating those finance managers and the CFOs. They were very excited. They were making good presentations. I would like to congratulate to all the winners of BW Finance 40 Under 40 2025. Thank you and best of luck.
I would like to congratulate all winners of BW CFO 40 Under 40. Very eminent jury participated in the process of selection of these winners and spent hours looking at their forms, looking at their capabilities, interviewing them. The entire selection process and interview process was very detailed and very impartial. I wish all the winners a huge success in their future. Thank you very much.
I happen to be one of the jury members for the BW 40 Under 40 Finance Leaders 2025. I must say the process of determining who the winners will be was an extremely enriching one from our perspective. The shortlisted candidates made stunning presentations to the jury members, and the jury members had an opportunity to ask them a question or two about their achievements that they've had so far in their careers. We were all very delighted and glad to see the young finance leaders doing extremely well in the field of finance. I therefore take this opportunity to wish all the candidates the very best for the future. I would also like to congratulate the winners of BW 40 Under 40 Finance Leaders 2025. My heartiest congratulations to all the winners.
A big round of applause for jury members as well, please, for the hard work they put in for making sure we get out of this list. With that, time to reveal the winners of the 4th edition of BW Finance 40 Under 40 Awards 2025. To present the first set of awards, please join me in welcoming the stage of presenters, Arvinder Arora, the CEO of BW Healthcare World, BW Wellbeing World, and also BW Pharma World, along with Mandeep Mehta Group CFO, PB of FinTech, Policy Bazaar, and also Pesa Bazaar. हाँ वैसी ताली बजाने में तो सोचना नहीं है. चलिए, time to reveal the winners of the 4th edition of BW Finance 40 Under 40 Awards 2025, and the first winner joining the powerful list for this year. Anand Jawar, VP Finance, Head Analytics and Digital Transformation, Dr. Reddy's Laboratories. Congratulations. Chaliye, moving ahead, the next winner, joining the powerful list for this year. Our Steve for National Sales Co-Pilot, Nestle. Rashmi, please. Congratulations. Winners, please don't forget individual picture here. And then a group picture on the end as well. Chaliye, the next winner joining the powerful list for this year. Chirag Punyani, Head Tax and Insurance, Nestle India. And with that, the next winner joining the powerful list for this year. Harmeet Singh Khanuja, CFO of Clinically. Harmeet, everybody. तो मतलब फोर्स दिखाओ, आपका ही मौका आएगा ऊपर आने का. You also come up eventually. Chaliye, the next winner joining the powerful list for this year. Harshad Adhavani, Assistant Vice President, Hexaware Technologies. Congratulations. And the next person to join the power list of BW Finance 40 Under 40. Himanshu Garg, the Chief Financial Officer, Solarium Green Energy. Himanshu, everybody. Congratulations. आगे बढ़ते हुए, the next person to join the power list of BW Finance 40 under 40. Lalit Rathi, Managing Partner, LKR Advisors. Lalit, everybody. Moving ahead, the next person to join the power list of BW Finance 40 under 40. Mahesh R.S. Kupanagri, Managing Director, Ambit Global Private Client. Congratulations, Mahesh. Thank you, Mandeep ji. Thank you so much, sir. Thank you. I please request Hitesh K. Upal, Chief Financial Officer, Magic Bricks, to please join us on the stage and help us present the next set of awards along with Harbinder ji. आगे बढ़ते हुए, the next person to join the power list of BW Finance 40 under 40. Malay Rai, Vice President, Global Tax, Bain and Company. I just realized that the background music, it is to uplift your applaud, not to, and was not a substitute. And I'm very Besharam at this. I will keep at it. I'm very sorry. That's my job. To make sure everybody gets the appreciation their hard work deserves. आगे बढ़ते हुए, the next person to join the power list of BW Finance 40 under 40. Napasa Gadia, Head Investor Relations, Public Relations, and also Corporate Communications, Crompton Previous Consumer Electrical. Congratulations. Also, reminder, winners, individual picture, group picture in the end. Moving ahead, the next person to join the power list of BW Finance 40 under 40. Nikesh Girish Kumar Seth, Head of Finance, Imaginarium Group. Nikesh, everybody. Congratulations. Moving ahead, the next person to join the power list of VW Finance 40 under 40. Nikhil Gupta, Senior Director of Finance, Zones India, Zones Corporate Solution. Congratulations, Nikhil. Moving ahead, the next person to join the power list of VW Finance 40 under 40. Nikita Jain, Finance Transformation Head, HCL Technologies. Congratulations. Moving ahead, the next person to join the power list of VW Finance 40 under 40. Pallavi Desai, Head, Client Relations, AKM Capital Group. Pallavi, everybody. Congratulations. आगे बढ़ते हुए, the next person to join the power list of BW Finance 40 under 40. Prashant Agarwal, partner, PwC. Congratulations, Prashant. Moving ahead, the next person to join the power list of BW Finance 40 under 40. Pushpendra Singh, the co-founder of Centricity Wealth Tech. Pushpendra, everybody. Thank you so much, Hitesh, sir, for helping us with the awards. Thank you. I please request Gaurav Jain, the CEO of AXA, to join us on the stage and help us present our next set of awards. आपके हैं थोड़े से भी. आगे बढ़ते हुए, the next person to join the power list of VW Finance 40 under 40. Rahul Ojha, Global CFO, Regenesis. Rahul, everybody. आगे बढ़ते हुए, the next person to join the power list of BW Finance 40 under 40. Rahul Watts, Director, Investment Research, Sutherland Global Services. Rahul works, everybody. Congratulations. Thank you, Arvinder, sir. Thank you so much for the awards. Thank you. May I please request Swati Chauhan, Deputy CFO of Vedanta Limited, to please join us on the stage. Moving ahead, the next person to join the power list of BW Finance 40 under 40. Ramya Kumar, Associate Director, Cognizant. Ramya, everybody. Congratulations. Individual pictures. आगे बढ़ते हुए, the next person to join the power list of PW Finance 40 under 40. Rashmi Vikram Reddybury, Business Finance Head, hashed in by Deloitte. Congratulations, ma'am. आगे बढ़ते हुए, the next person to join the power list of BW Finance 40 under 40. Richu George Verghese, Lead Financial Planning and Analytics, Data Consultancy Services. Congratulations. आगे बढ़ते हुए, the next person to join the power list of BW Finance 40 under 40. Rohini Gupta, Head of Retail Commercials and Partnerships, Campus Group. Congratulations. आगे बढ़ते हुए, the next person to join the power list of BW Finance 40 under 40. Saransh Mundra, VP of Finance, IKS Health. Congratulations. Thank you so much, Gaurav ji. Thank you for helping us with the awards. I please request Tanvi Ahuja, Group Senior VP, Strategy, Ops and Marketing, BW Business World, to please join us on the stage and help us present our next set of awards. आगे बढ़ते हुए, the next person to join the power list of BW Finance 40 under 40. Sheetal Hera, CFO, Marketing, HZL Hindustan Zinc. We have with us Faisal Javed, on behalf of Sheetal, the zonal sales head, to receive the award. Congratulations. आगे बढ़ते हुए, the next person to join the power list of BW Finance 40 under 40. Priya Sharma, Head Investor Relations, Jindal Stainless. For sure, everybody. Moving ahead, the next person to join the power list of PW Finance 40 under 40. Shreyans Mehta, Group CFO and Partner, Alpha Alternatives. Congratulations. Harvinder, so I please request you to also join them to present our last set of awards. And the next person to join the power list of PW Finance 40 under 40. Shrikant Sharma, Site Head, Gurgaon CFM Accenture. For Shrikant, everybody. Congratulations. आगे बढ़ते हुए, the next person to join the power list of PW Finance 40 under 40. Siddharth Saluja, Director, Vendor Operations Management at GBS Pfizer. For Siddharth, everybody. We're down to our last 5 or 6 awards. आपने जो जोश पहले में दिखाया था, it will be wrong अगर आप आखिरी वाले को भी वो ना दिखाएं, just because the last on the list, it's just the common list, it's just alphabetical order. आगे बढ़ते हुए, the next person to join the power list of PW Finance 40 under 40. Saurav Nolka, founder and CEO of Zen Statement. Saurabh, everybody. Congratulations. आगे बढ़ते हुए, the next person to join the power list of PW Finance 40 under 40. Sukanta Kumar Panigrahi, Head of Finance, River Mobility. Sukanta, everybody. Congratulations. आगे बढ़ते हुए, the next person to join the power list of PW Finance 40 under 40. Tarun Poddar, the founder and CEO of Foxhawk Ventures. Tarun, everybody. Congratulations. Winners, please don't forget individual picture. And then a group picture in the end as well. We're down to our last five. Aage बढ़ते हुए. The next person to join the power list of BW Finance 40 under 40. Utkarsh Garg, CFO and COO of Locus Mora Labs. Utkarsh, everybody. Congratulations. Aage बढ़ते हुए. The next person to join the power list of BW Finance 40 under 40. Vandana Rangarajan, Executive Director and Co-Head, Tamil Nadu 361 Wealth and Asset Management. Congratulations. Aage बढ़ते हुए, the next person to join the power list of BW Finance 40 under 40. Vedant Agarwal, Senior General Manager, Reliance Industries. Congratulations. Aage बढ़ते हुए, the next person to join the power list of BW Finance 40 under 40. Vikas Goyal, founder, director of OmniFin. Vikas, everybody. Congratulations. And the next and the last member to join this year's power list of BW Finance 40 under 40. Yash Mehta, Vice President, Reliance Industries. For Yash, everybody. Congratulations. With that, we come to an end of the awards ceremony. Thank you so much, Swati Zanvi and Harvinder. So thank you. May I please request all the winners to join us on the stage with their trophies for a group picture. Also, a big thank you to the Business World team, Akash, Ashish Supriya, Tanvi, and everybody who was involved. Thank you so much. Let's got a few chairs for you guys. You can also sit here if you want in the front, if you're comfortable. And ladies, there's a chair empty. Anybody who wishes to. Tanvi, aaja. So the back you aren't visible. You can come here. Now both of you are not visible. Up, you can come here. You can come here. You've got more people here. अच्छा पहले आप लोग अपने mobile phones. You've got 10 seconds, guys. Wherever you want to look. Done? Yeah. We will know it's you who made us late today. Done? Now, to vacate this area now. Sorry. The center frame now, please. Please also wait. Naval, can you raise your hand? Now that frame, please. Done. Thank you. Thank you so much, everybody. Okay, now we'll please wait. Now we'll do our winners then. The 2 seats empty. Anybody can occupy them. एक और करेंगे. Thank you, Tanvi, Arvinder ji. 3 seats are empty. Anybody, the ladies or anybody else. Done, everybody? Sir, आपका वो भी रह गया. Done? Done, guys. Thank you so much. Please join us for dinner. Congratulations. Yes. If anybody wants boxes for the trophies, you can collect them from stage left. That's audience right. From Vinita. She's here to help you. In case you need boxes for the ones who have flight, etc., to carry them back safely, your trophies.